we'll just do a recap of what we had done in the morning session. So let me take a whiteboard here. Just want to switch the screen to whiteboard. So let's say in the morning we had seen a couple of setups. One is we learned about how to read out of a chart, how to read out of a chart. So still we haven't touched the basics of out of the chart yet, but yes, so that will give you a quick glance about how the limit orders, how to do the visualization of the limit orders. That's what we practice. The second thing is we learned what is an initiative drive. Initiative drive. Also, we learned about responsive activity, right? So responsive activity. That way, we learned what is how the liquidity behaves in the market. So mostly what we learned is how the liquidity behaves in the markets, how the price travels in a low liquidity zone, and how the price travels in a high liquidity zone. And what is the difference between? We also learned the difference between.
Hi, Rajendran, you're seeing some audio problems as before.
Is it good now?
Not really. Can you speak?
Yeah, so we also learned about the difference between responsive activity, and also we also learned about the consolidation activity. Right? So the difference is that both are sideways markets, whereas responsive activity will have high volumes at the balance high or at the balance low. It will be combined with high volume, and then main reversion happens from there. Whereas the consolidation also kind of a sideways activity, but then it happens with very low volume at that balancing zone, and a responsive activity will be typically happening like this. Same, whereas the big volumes are associated at the swing tops, somewhere around here, you'll be seeing a lot of high volumes happening at the peaks. Very close to the peaks, you'll be seeing a lot of volumes over here. It could be buying or selling, but usually it is a sideways market where you'll witness high volumes or heavy volumes at the swing high or the swing low. The small swing highs or small swing lows will be associated with the volumes, whereas that is absorption, right? That is absorption where price is traveling in a high liquid zone. Whereas and something like an consolidation is like it is also a sideways action, but there is no real volume is happening over there. That means there is no serious money who is doing accumulation or distribution. Just some casual buying, selling activity is happening among traders. No big money is flowing over there. They're just casual small trader activity, probably small traders. The locals, we call them as a day traders, right? They might be doing buying and selling against each other. There's no serious volume flow happening over there. Right? That's the one thing you can understand over there. And then we also talked about a couple of strategies based upon initiative and responsive activity. So one of the strategy what we talked about is the absorption range breakout strategy. That we talked about it. Like how when responsive activity becomes initiative activity, and how one can understand the subtle changes that is a change from absorption to responsive activity to initiative activity, and how one can take advantage of those information. The fifth activity we also discussed about what we also discussed about the how big orders at day high or day low. Right? What is the meaning for that? We also discussed about what we discussed about iceberg orders there, right? They're merely iceberg orders from the big institutions or maybe from big players, and it is associated with a strategy called a trapped buyer or a trapped seller strategy. Eventually, it is an immediate mean reversion gain. Immediately, one can expect a trend reversal. The test towards is mostly towards the VWAP level, but at times it can be a day high or a day low. Also, that is very rare cases. To play that kind of game, we need to have a context, right? So, which is mostly supported by market profile kind of setup. Market profile or other order flow levels like unfinished business, which we don't want to talk about right now. So if those levels are supporting, then in that case, we can think about making one of the target as VWAP and second target as towards wherever the market takes, right? So that is slightly difficult still. And now what we want to talk about here is that now again we want to come back to the basics. We are going to explore the other order flow components one by one, and then we are going to discuss about a couple of strategies. Like one of the strategy which I am going to discuss is unfinished business. I think somebody, Jason Thomas. I'm just getting an echo, so I'm muting you. So, the other case. Just give me a second. Voice is breaking. Is it still breaking? Oh, I don't know what is the issue today with the internet connection. It's good. Okay. Some people it is good. Not now. Okay. Thank you. Yeah, I muted everyone. Right. So I guess I believe you people are able to see the whiteboard screen now. Yeah. Okay. So there are other strategies which I'm going to talk about it. Prior to that, we'll look into closely what are the different styles of order flow and how we can make use of those order flow ways of looking into the order flow information. Right. So let me switch back to my screen one. So I'll go back to my screen one here. So here we are again back to the screen one. So we looked into different styles of order flow. One is the bid-ask volume, or we call it as a bid-ask ladder. So where we've seen that typically the color coding is what it makes it different. Where the lighter volume, in case of bell TPO, is considered as a bigger volume, whereas the thickly shaded volume is considered as a low volume areas. Right? That's how it has been plotted. I asked Vinod. He said he responded that the colors are not suiting them. Usually, most of the other tools will have thick color for a big order flow and lighter shades for the low volume. Whereas in this case, only it's complete reverse of it to match the background colors usually. And the bid-ask imbalance, when it comes to the bid-ask imbalance, we talked about it. Usually, I prefer using a setting of 10, and it differs case to case. Whereas if you're using crude or some other instrument, probably might even thinking about using a 5 or a 4. Some people even use 3 to understand where more momentum is happening. For me, anything about 10 in case of Nifty or Bank Nifty, I'll consider as a stronger momentum. So accordingly, those levels will be plotted in the form of a red or green. Right, so you're seeing a sequence of red sellers. That means you can identify momentum followers over there. Mostly it is a sign of an it is a sign of an initiative drive. The more you're going to see something like this, the more one is going to see a break with a lot of gaps in between and a lot of momentum happening in between the candle. That is closely an initiative drive. Again, you can see the initiative drive over here. But a lot of momentum sellers are coming and pushing the price down, right? And it's creating a lot of how many here? 1, 2, 3, 4, 5. Total 6 blocks. Total 6 blocks over here. And again here, total 3, 4, 5, 6. Again 6 blocks over here. So when there are more than 4 or 5 or 6 blocks here, you're going to see that is a sign that it's mostly because of when we are in the initiative drive mode and price is traveling in a low liquidity area. Probably volume will be high. Volume could go even 4,000 also, 6,000 also. But if you look at each and individual price levels, the volume will be relatively thin, probably around 200 levels or 300 levels, and there will be a subtle difference between a huge difference between one big volume to another big volume. That means volume price is traveling in a low liquid zone. It's a smooth way to move the markets, right? Price can move smoother now. You won't find this kind of a clunky action over there. When it falls down, it falls. That's how the initiative drive takes, right? And yeah, next comes the volume at price. So volume at price is where instead of showing the buyers and sellers bifurcation, it shows only volume at each and every price levels, right? So let's say this 1,000 quantity. This 1,000 quantity over here could be some 300 sellers 300 sellers and 720, 700 plus buyers also. So 300 sellers, and so sellers should be 300, and buyers can be, let's say, approximately 700 levels, 700 plus. Instead of showing a buyer seller bifurcation, it shows as a volume which happened at each and every price level, right? Which is also one way one can measure whether activity is happening in an initiative drive mode, or how the order book is getting filled up, how the volumes are when the price is traveling down. So this is the red candle, right? When this red candle is going down, how the volume is happening inside that. Is it resulting in a more transaction? If it is resulting in a more transaction, that means we are in a more of an responsive mode. So for example, price is hitting a day high, it happens some big volume over here, and again it goes down. You see a lot of volumes are happening here. Every bar it is 225 lots, 238 lots, 470 lots is getting transacted, and again it's hitting a day high, a big volume is coming in, and one more big volume at day high 511, and then price tend to go down, right? So that is a responsive activity, that is more of an responsive activity. Now if you see the price is traveling down, the volumes are relatively getting thin and thin and thin, and again now it's getting meeting one more layer of liquidity over here. So this zone is completely traveled in a low liquid zones. The entire block here, price traveled in a low liquid zones, and again price met volatile liquidity over here. You can see again the transactions are getting bigger and bigger. 500 lots, 315 lots, 400 lots, right? So more transaction is happening means price again meets the liquidity zones. Okay, so ideally I don't use volume at price much because it's more or less same representation of bid and ask imbalance. But yes, if you want to see how the breakout is happening, if you want to measure a certain set of breakout, how the volume behavior is happening over there. Let's say price is touching the upper Bollinger Band, and you want to measure whether the responsive activity is happening over there so that you can initiate charts over there. Then yes, one of the places where you can use volume at price to look for such kind of behaviors, right? So probably your RSI is saying it is overbought or oversold, and then you want to confirm from the order flow that responsive activity is in progress so that you can take a counter bets in the markets. So in such kind of case, one can use it to one can use studies like volume at price or bid ask imbalance. But I prefer more of a bid ask imbalance anyway. Coming back to here again, there is a delta flow. Delta flow talks about how smart money. The delta flow is what it talks about whether smart money is in a buying mode or not. Right. So based on that, we have a delta flow strategy. Based upon most of the delta flow strategy goes like this. Let's say maybe we talk about that strategy tomorrow. Anyways, I'll give you a glimpse how it looks like. Let me take a whiteboard here. Okay, so first of all, we need to understand what is delta, right? So a delta is nothing but it's not able to take up. Yeah. So delta is nothing but what difference between total buyers minus total sellers. Total sellers, right? And at the same time, total buyers. When I say total buyers are nothing but the buyers who placed aggressive buyers or aggressive market order. Aggressive market orders, and total sellers is nothing but aggressive market sell orders. This is market buy orders. Okay, so if delta is positive, that means buyers are in control for that particular bar. And if delta is getting negative, then that means sellers are in control for that particular bar. It's pretty simple, but based upon the delta, we are going to talk about one of the interesting strategies in the upcoming session. It is called as a momentum auction reversal. The strategy name is called strategy is momentum auction reversal, where it involves initiative drive. It's a combination. It's a strategy which is combined initiative drive plus an absorption. Initiative drive will transform into absorption, and at times it also combines with trap buyers and trap sellers also. So it's where we look into delta information to understand whether momentum exhaustion is happening or not. It's one form of where we'll be looking for a momentum exhaustion. Right? So we'll be looking for a momentum exhaustion signals over here. So again, that we will look into delta, but the delta flow. So right now we talked about.
We are having an audio problem now. Last 2 minutes.
Is it? So I was talking about momentum auction reversal. Is it fine now?
Yes, it's better.
Okay. I don't know why the audio issue is repeating today. Okay.
Mr. Rajendran, a small interruption.
Yes.
I request you to kindly enable subtitles in this recording because at times we are missing some lines due to audio problem. So if subtitles.
Sure. I'll try to enable subtitles there wherever it is missing.
Okay, then right. Thank you.
Yeah. So the strategy which we are going to discuss is momentum auction reversal, right? Which is nothing but a combination of an initiative drive, and all of a sudden it becomes absorption, and it's one form of a momentum auction reversal. I would say that where we look into delta information, and that is where we'll be looking for a momentum exhaustion pattern. So let me go back to the strategy, and then let's discuss one of the strategy based upon the delta. So let me switch to the screen again. Right. So if you watch the screen here, the delta flow, based upon delta, we have a couple of strategies. One of the strategy is called momentum auction reversal. Another strategy, another two more strategy we're going to discuss. It's called delta unwinding or delta packet positioning, which we'll discuss shortly. So this mode, what happens is that instead of displaying the buyers and sellers at each and every price level, the delta will be displayed at each and every price levels. Right. So let me go back to the charts and I will show you the delta levels. I mean, most of the order flow charts provide these kinds of information. So now it is, let's take only a particular block of charts to explain. Let's take this particular example. Right, so this particular example, and let's look a little closer. Now the 7 and the 337, right? So in that case, if I change it to delta, the delta difference becomes I don't know what happened. I think okay. Anyways, I'll try to look into the delta candles later on, but there was some small issue here. So what the delta shows is that it will be trying to show the difference between the delta at each and every bar level, right? And at the bottom of the table also, you'll be able to read the delta values. The delta values will be mostly displayed on your screen. So here, I guess the letters are a little black color, so I can able to control from the table. So I just the top one is the ask, the second one is the bid. So if you take this particular example, let's take this example. The top one, 1067, is the total number of buyers. That is sum of all the buyers over here. And 1112 is nothing but the total number of sellers, which is nothing but sum of all the sellers in this block. I guess you're able to follow my cursor. Anyone able to follow my cursor? Okay. If not, better I'll take this one. Okay. So the 1067 over here is the total number of buyers, and the 1112 is nothing but the total number of sellers. So the sum of all the buyers minus sum of all the sellers gives you the delta. That is nothing but minus 45, right? So minus 45 means that there is an equal, almost equal amount of buyers and sellers are controlling this candle, even though price is going down. At each and every price level, if you take the overall, the effort has been taken by the sellers, but compared to the buyers, sellers are taking only little effort, but still price used to go down. That is primarily because of price is traveling in a low liquidity zone. Mostly those liquidity zones has been completely over. Now price is falling, even with this low volume, price is falling down. With low volume, that means most of the limit order has been got exhausted. Now price might be traveling in a low liquid zones, right? But if you look in this quantity, this particular high, right, where almost 900 quantity traded, right? So 900 quantity traded, which is why I'll call that as it's kind of a trap buyer. You won't find that difference. It doesn't matter whether it is 402 is happening here and 500 is happening over here. The total volume happened over here is total 900 volume might happen at that particular price. Probably 955 is the total quantity over here. Total 955 quantity you can see on the left hand side, which shows the sum of all the price level which happens on that particular day. Right. So maybe another 5 lots would have been happened at this price. Maybe it would have happened later on. But total 955 lots got traded at that price level, like 402 plus 553. If any levels again it's getting traded, that levels would have been counted as, and that volume will be placed over here. It's called as a volume at price. So it always shows the left hand side. It always shows intradays, only that particular day's volume at each and every price level. Total volume at each and every price level. Whereas here it is only showing for only that particular bar. Whereas here on the left hand side, it shows that throughout the day how many volumes happened. For example, you can see this level, 3,632 lots got traded, including both buying and selling activity. Right. So means the 11 and the 74 again. This 143, this 77, this 103, this 142. Everything added together, we are getting this number over here. So if you look at kind of an auction, typically a good auction will have low volumes. Typically, a good auction should have low volumes. It should not come with this kind of bigger volumes. When price is coming up with bigger volume, price tend to fall down. But as I said, eventually that is considered as a bad high. Price come to revert back. Again, price will eventually have a tendency to mean revert back to come and clear those reference levels. So even if you have any immediate bigger target, like some people will have a weird target, like 500 points, Nifty will go down, 600 points, Nifty will go down. Even if you have such kind of bigger targets, you will start waiting. Probably that will rationalize your thinking about the markets. Even if you have immediate another 100 points down, probably whenever there is a small down comes, you will be in a position to take some quick profits on the downside, because you know that anytime price could mean revert back. When it reverts back, it could revert back badly. So always you will be playing a more rational game when you know these kinds of context. So even if you know that there is a sell signal, the price is selling off, you will also go for a short signal. You'll also go for a short. But when you are taking a decent profit, you will be getting out of the table, because you know that always price having a tendency to again revisit back 10,824 levels, right? So that is one thing. Always, if you look at the day's volume will be forming like a balance. Mostly a typical day, if I assume that this is a day, more volume will be happening in the center. More volume will be happening at the center typically, and less volume will be happening at the day high. So less volume will be happening at the day high, and day low also very less and less volume happens. Not much of a volume, but very less volume happens over there. Very less volume happens over there. But if you find more volume transactions are happening at the day high or at the day low, either the day high, you're seeing big volume transactions are pretty close to that 1 tick, 2 tick, 3 tick, or up to 5 ticks. You're seeing such kind of bigger transactions. They are not a secure high. Similarly, on the downside, if you're seeing such kind of bigger transaction happening over there, that is also not a secure high. typically it should not have bigger volumes. Tomorrow I'll explain why in market profile. So, but I assume that this is a concept from market profile. A good auction always end with low volume, right? So that at the top, maybe price will spend very less time at the day high and at the day low compared to any other point. Whenever a price is spending less time, that will be always resulted in a less volume. Whereas here, price is spending less time here. See, hardly it would have taken only 1 or 2 seconds to trade over there, which never came back. Only 1 second, that kind of bigger volume which is happening at the day high, which is not a good auction. So we say like it's a poor way of auctioning, or it's an unfinished auction or a failed auction, whatever the name you can call it. But it is a poor way of auctioning. Price temporarily takes a downside path, but eventually they will retrace back, right? So again, that you can visualize from this left hand side whether the day high has been secured or not. So we call that as a VAP level, volume at price. Volume at price. And so we are discussing about trading strategy, right? What strategy it is? We discuss about momentum auction reversal. So one of the strategy, it's called as a momentum auction reversal strategy. So this particular strategy, you can see this also comes in the form of a signal with an alerts with the stops and targets, right? So what this particular strategy is looking out for here is that it typically looks for an long volatility candle, and also a lot of momentum. Though this momentum is missing in this case, this is not a real momentum condition satisfied, but the delta here, at least I require more delta over here, a lot of positive delta. What we anticipate is that a lot of positive delta, maybe a lot of positive delta, and the candle range will be really big. You'll be seeing a lot of packeted deltas over here. And despite that, you'll be getting momentum exhaustion. The momentum exhaustion comes in the form of an inside bar. So there is an inside bar here. At times, an inside bar is also followed by an inside bar. That is also one form of an absorption. So you'll be seeing a lot of inside bars over there. Huge volume, huge range of the volatility candle, and then an inside bar at times. Maybe at times it can be combined with more inside bars. That is a sign of an absorption, right? So that is a sign of an absorption. An absorption is happening here. Even though more momentum happened over here, the next bar is a negative bar, and again one more inside bar. That to confirm the momentum auction reversal, we need only 2 bars to confirm. The very first one is a huge volume with a huge volatility candle. When I say volatility, I'm talking about the range of the candle. The range is relatively big. That's what we say, like a high volatile candle. And you see the volume was more than 2,500. So it's been more than at least last 5 bars, more than last 5 bars or last 10 bars. That you can control from the settings. So typically we look for last 5 bars volume. Last 5 bar volume should have a very bigger volume. And last 5 bar delta. So here is something called delta candle. So here is called the delta candle. The delta candle is positive, means delta is positive. The delta candle is positive, means delta is positive. The delta is huge, 800 or 500 or 600. We call that as a bigger delta. The delta is positive. We have a very big delta. We have a very big volume. We have a very big volatility candle. Right inside the candle, we also have trapped buyer and trapped seller also. Anyways, it is a short, but it's just more confirming that it's more and more. It is a combination of an MR plus trapped buyers, trapped buyers or trapped sellers. It doesn't matter. So usually, what had happened, like this is again an stop loss for an MR candle. So we call that a momentum auction reversal. And from there, usually it means reverse towards the VWAP again. So most of the primary targets are towards the VWAP, and that got reverted back. And usually you'll be seeing a lot of absorption in this band, and then try to take a mean reversion on the downside with momentum auction. So now let's have a quick look into that strategy. I have one more drill video which I prepared, how one can identify doing a live markets. So probably what we will be doing here is that from here on we'll be posting a lot of live drill videos not only in the next 7 days. In the next 7 days, we're going to talk about a lot of such patterns, how one can identify such patterns. My ultimate aim is not to provide calls, right? But how one can spot during live market hours, how live markets, what kind of reading one should do, so that you can go independently and you can figure out those patterns. That's what we're going to practice in the next 5 days of live training session. And post the session, we'll also posting a lot of drill videos in our portal. And so I'm taking a lot of video extract from the auto flow charts. Some of them are live, some of them are simulated. So we'll be trying to explain as much as possible with more examples why the repeated patterns are happening again and again and again. So there is one such pattern here. It's called as a momentum action reversal pattern. I have two strategies over here out of that. So I'm going to talk about in today's session. So one is momentum action reversal trading. Okay, let me open with media player. So you see this example. This example is being taken on budget day, on budget announcement day, right? So you can find many interesting things, right? So one of the day, what happened is that the budget day announcement around 1 o'clock, there was a big volatility candle. You can see a lot of green imbalance is coming in. A lot of green imbalance. It shows that momentum is happening in that particular candle. The volatility of the candle is really big. Delta is really big. Look at the volume. Volume was closely 11,000 lots on the budget day, which is the day high volume. Maximum it has been seen on that day. And look at the delta. Delta is also kind of big, right? So the delta is quite huge there, around 2,000 minus 2 sides. 2,122 is the delta. So you can see from the positive delta that it's a very big delta. And the next candle, if you look at the next candle becomes an inside bar. Right? First candle is a positive candle. It's hitting a day high. So one of the examples is that it also comes at a day high. The huge volume, huge delta. Despite that, despite that, second candle becomes an inside bar. That too, it becomes a negative bar. And that is one of the information saying that this market is most likely to be weaker. So most likely, the entire momentum has been completely exhausted. The entire apart, probably we can say like the market would have been found out and would have been found out and zone where it would have been exhausted all the orders in the order book. Probably now it could take a reverse direction. At times it could be a kind of an initiative to initiative drive. It forms an initiative drive. Price was continuously keep moving in an upward direction. On the budget day, if you look, the price was continuously going up. When the news is over, they started rolling down. Right? They started rolling down. It's kind of a V-shaped reversal. It's kind of a momentum initiative drive to initiative drive. Initiative drive up followed by initiative drive down. Right, so let's try to have a close look into how this setup is being developed over there.
Rajendran, just one question. So here the delta was negative minus 210, but in the previous example,
no, that is not delta. That is not delta. By the way, that's you see that the delta is on the top. Maybe it's in letters are in black color. So first one is delta, second one is max delta, third one is min delta. So you have control to enable or disable. So the top one is the delta. 2122 is the delta. 2718 is the maximum delta it went. Minimum delta is minus 210. I'll talk about maximum delta and minimum delta, and we also have one more strategy based upon those max delta and minimum delta. Right. So 2122 is the delta here. Okay. So let me run the strategy here. And moreover, you can notice here there is one big volume also happened over almost some 1,000 lots got traded in this band, right? Which is also makes the candle at something like a what, something like an trap buyer at the day high also. I think it's a 7-minute video, so we are running at 3x speed. So means every second 3 seconds is getting passed by. So one of the places where one can take a stops at the day high and one can initiate a trade over there. it is a combination. It is not only it is not only momentum auction reversal, right? So it is also a combination of what? It is also a combination of momentum auction reversal plus trapped buyer at the day high. It's a trap buyer over here, so it's a big buyer in that candle. So it's combination of two things. Means temporarily will go down. They went down almost as low as 10,850 levels, and finally they reverted back also. So 2 days they went down, and third day they are back to the same level. But when these kinds of opportunities will give you tremendous opportunity, because the VWAP was around 40 points, 80 points down from here. So that's a day high. Price is hitting the day high. Very close to the day high. We are getting that big volatile candle, and you see that how much time price is spending over there. That is, it is not converting. It is actually supposed to be an initiative, but it's doing still a lot of absorption. It is absorbing some sort of price is spending more time in absorbing. Every time you are spending that absorption, you can see that 200 lots are getting transformed over there, and now again. Price spent more time in absorbing. Later on, it broken down. It's not an easy straight down move, by the way. Even though it hits the top, it tend to do a lot of absorption. If there is one momentum selling happened, that is fine. But then it had done a lot of sideways action before breaking it down. That looks like a V-shaped correction, but then it is not straight away. It is not initiative to initiative. It's initiative, little bit of responsive, and then initiative. Probably you can say, like, you asked me to draw, it went like initiative, little bit of responsive, and then it becomes initiative. And then again, it was doing some sort of an initiative again. Again, it went down to, a little bit of responsive here. So initiative up here, responsive here, initiative down here again, then responsive, again initiative down. You can see a lot of momentum selling happened, and now very less selling. Again, one more initiative selling is happening over here. See, ma'am, this is more of an responsive buying here. This kind of responsive buying over here. So seller came, and then they got back up. So this zone is clearly sellers are there, but despite that, buyers are doing responsive buying here. Means price found its liquidity band. Again, prices went to go down. Every time it hits, again it tried to bounce back. Hits, bounce back. Hits, bounce back. That means we are in a thick liquid zone. Price would have been found its liquidity temporarily, but in order to do that, they have to eaten up all the orders to go down. You can see that price is forming a range over here between 10,965 and 10,960. Most likely a kind of a band, this band. Like responsive sellers over here, responsive buyers over here. You can see responsive buyers over here. Now price is breaking with what? Price is breaking with a kind of an initiative drive. So that is also one form of an absorption you can see in the intermediate. A small block where it's an absorption here. So let me scroll back and then repeat again. I'll pass the video. It's here before breaking down. Before breaking down, you can see a lot of differences over here. The sellers came up and then they pushed back. Again, the buyers showed up at the top. Again, despite that, market fallen. And again, it went up. Now it is breaking with a lot of zeros. You see a lot of zeros coming in, right? So it's one form of an absorption breakout strategy here. One form of absorption breakout strategy here means you can again initiate one more downside auction here. That means most likely the orders in that location is completely filled out. So now again, one have to take an initiative drive towards on the downside. So means responsive activity has been came to an end faster. So faster responsive came, responsive buyers came, again responsive sellers came, again responsive buyers came. But this time, this time there are no responsive buyers. This time there are no responsive buyers. Only responsive buyers here, responsive sellers here, and the bounce back without any responsive activity, and then finally they went down. Right. So again, I'll repeat again. Maybe that was a little bit clumsy. So price went down. Finally, they found a responsive buying activity here. That's why price went up. And again, price went down. While going down, you can find responsive selling also at the top. So responsive buying here, responsive buying, followed by that responsive selling at the top. And now, while this time it is breaking down, there are no real pushback. Price go up with low volume. You can see the volumes. All these places volumes are relatively low. Now, when it is breaking down, it breaks with lot many zeros. See, lot many zeros are coming in. Those are signs that an initiative drive could be beginning, right? So this responsive buying and responsive selling came, but it's not lasting for a long time. If it is lasting for a long time, one should be still looking for such kind of information there. So let me run the video again here. Let me continue with the video. Yeah, it keeps going down. The VAP was somewhere around 10,040 levels or 30 levels, 35. Yeah. So you can see that price is starting in a low liquid zones. That means initiative drive has been happened. And yeah, so no responsive buying yet. Just price is traveling in a low liquid zones. Some responsive buying. Maybe some here, some if at all, they might do some sort of an range bound activity. Finally, they got some liquidity. They might be balancing for quite some time, I guess. Then.
Now, one question here.
Yeah.
In first time price was coming down. We would have taken suppose trade. We would have lost. No, stop loss would have been hit.
Yeah, you're out of the game.
But again, we have to see. No, it has
Again,
happened. Why?
You have to look for a different opportunity.
Can you explain why it has happened? What have happened? No, any.
I don't know. Maybe some more aggressive buyer would have been interested in pushing the price up. Usually, the sellers would have been taken control by that place. Right, very, very rarely they go by one tick and then that is very, very rare scenario. And some of the cases, what happens, it breaks and they keep moving up and up and up. So that case, in no matter whatever the case it is always good to keep a stop. Just think about that. You're done with the plus, you're out of the game.
Okay. Second time also it is a good trade, isn't it? When again going up, when went up, again we can say okay, take a short.
Yes, you can.
So one trade would have lost, a second trade would have got benefit. Okay.
Yes.
Right.
So these kinds of opportunity doesn't come. So these are the days where your risk reward ratio was almost 20 times or 30 times, something like that. Mostly these kinds of even days you will be able to get such kind of setups. Right. And that is budget day. I think we already seen in the preview webinar. But to understand how the liquidity looks like, how is it? It's if you look overall, that particular drive is more of an initiative, slightly bit of responsive, and then initiative. Right. So let me open that video again, and then let me show the final structure, how the structure looks like. So the final structure was looking something like this. Like so, what ideally happened in there was initially there was a good initiative drive from here. So initiative drive again, all these are initiative drive. It finds the liquidity over there, a little bit of liquidity. The momentum buying stops there. The momentum buying stops there with a big volatility candle, and it also happens with a bigger volume and bigger delta. And immediately it stops with an inside bars. As I said, inside bars also one form of an absorption, right? So it's not just one inside bar. Instead, there are two bars. If these two bars are inside bar to the bigger candle, right? So these two bars are kind of an absorption, and followed by that an outside bar, which breaks down with initiative drive. Again, it becomes an initiative drive. So it's an initiative drive up. Overall, it's an initiative drive down, kind of a V-shaped reversal. It is. So that is why we call that as a momentum auction reversal. Right? Maybe I'll run through similar example. This is also taken on February. So all the examples are taken only during this month, current month. So momentum reversal strategy, right? So it's one of the example for a momentum auction reversal strategy. Just give me a second. So this is one of the example for a momentum reversal strategy. You see that the candles are getting volatile and bigger range is coming in. The candle, the price is falling a bit faster. It's been falling a bit faster, and I think it's a 10 minutes video here. So almost nearing the previous day low. I mean, the day's low, almost just nearing the day's low. You see the volatility of the candle. The volatility of the candle is really big. Okay, so notice one thing here. The day low was 217, and then price went up. Right, again it went down. Again 285 contracts got traded. Again selling. Price is going up. So you see that the day low alone, it's not day low, but some sort of a responsive activity is happening now. Initially it looks like responsive, but then it turns into initiative to initiative. So it turns into what? Initiative to initiative. It was an initiative down followed by an initiative up. You see that the initiative buyers are coming in, but let me run clearly so that you'll be able to know that it's an initiative to initiative. It's turning into initiative to initiative. Initially it looks like absorption, but then it turns out to be initiative to initiative. So now a lot of initiative seller followed by a lot of initiative buyer. So you see that it's clearly turning into initiative to initiative. It's also a subtle immediate long. This usually happens in the high volatile markets. Kind of initiative to initiative. Those kind of initiative to initiative bands will act like support zones. Kind of stack the zones. High volatile candle, it's a stack zone. So those zones is where next time price comes to that level, all you need to expect is any responsive buying. Even if you miss this price, you can expect the price to come back and touch price testing that level. One can initiate a long over there. Means responsive buyers are coming and supporting over there. Much one more initiative buyers are stepping up again. And initiative to initiative can happen anywhere, not necessarily it has to happen the day high or a day low. It can be an intermediate low, also intermediate high also. But trap buyer or trap seller should be at the day high, right? So, and moreover, momentum auction reversal also should happen at the day high or a day low. Whereas in this case, it's initiative to initiative. Just call that as a simple momentum reversal strategy. Momentum sellers came and then they got exhausted, and again momentum buyers are taking control over here straight away. So which one will be able to identify in the form of an auction imbalance. It is also, we also call that an auction imbalance strategy. So these are kind of a stronger auctions. One should not fight, especially a momentum reversal is happening. A selling momentum is counterattacked by a buying momentum. It's an immediate long. This is on 7th of February, I think, on RBI announcement date. RBI announcements came somewhere around 11:15 p.m. and post that there was a slide post announcement, and again price started going up before again finally coming down. Right. So, but then if you look at that particular point, it was an reversal. You see that the momentum is still continuing. Momentum buyers came, again momentum buyers are coming in. We should not fight them. If at all you want to short this market, we should be, if you want to time the market, even if you feel that market is going down, one have to really wait for the momentum players to get paid out. Because it's, what is happening is a quick long opportunity, right? If you want to positionally short, probably yes, you can look into the order flow and you can still wait for some more time to take a short over here. So a lot of stacked buying is happening. Stacked buying here, again some little bit of stacked buying over here. They went on testing towards the VWAP. In fact, I guess they've done a little bit more also. Just like that, the buyers rolled in all of a sudden. Or let's say think about this scenario. Let's say you are in short, you're shorting this market, and you find that when the prices went down, and immediately price started rolling up with the momentum buyers It's kind of an initiative. You start seeing initiative drive. One of the players to cut down your position and keep moving up. Close your position and then maybe come at later prices, because that has a potential to move in a very, very short term. If you're a scalper or intraday player, it's going to move against you. Maybe if you want to short, again, you can come and short at higher prices. So cut down your position there, and then again try to take shorts at higher levels or some other levels, even if your context is supporting. And most likely the price went down. At last, there was some not much of a volume at least. What happened there? Again, there was one more initiative drive. So you can see how the way they are falling and they are rising back. Your initial clue was there at the initiative momentum reversal strategy, initiative to initiative. Okay, so that's what momentum reversal strategy is all about. And so we looked into two strategies now. One of the strategies, momentum auction reversal strategy. A momentum auction reversal strategy, how it forms it forms a big volatility candle. I'm going to show a couple of examples, live examples, which happened in Nifty, Bank Nifty recently. Right, so and I'm also going to tell how most of the momentum auction reversal comes. Right now, you've only seen the pattern, but at what location you can anticipate, that's what I want to talk about it. Right, so when the price is falling, it falls with a big candle on the downside. The volumes are huge, so volume is huge. Delta is a big negative delta. Second bar, despite all these bigger sell-off, so you'll be seeing on the sell side, you'll be seeing a lot of momentum on the downside. So a lot of selling imbalance will be there. So a lot of selling imbalance here. Selling imbalance over here, and selling imbalance over here. On the sell side, in your order flow, you'll be seeing a lot of selling imbalance. So on the sell side, you'll be seeing a lot of volume imbalance. You'll be seeing it. Despite that, next bar becomes an inside bar. Right. So volume, if you in terms of Nifty or Bank Nifty volume, the volume will be around 2,500 plus, which I'll say like it's a decent volume with a huge volatility candle. If it is happening, then the next bar matters a lot. Next bar closes positive. The close of the candle, next bar is positive, whereas the previous bar is negative. Previous bar is negative. Previous bar is negative. In that case, we'll consider that as an momentum auction reversal. You'll be getting a signal saying that it's a MR signal. So MR signal with a stop loss at day low, it automatically arises and then it keeps moving up. At times, momentum auction reversals are day highs and day low. Mostly we will measure momentum auction reversal at day high, and at day low we'll measure it. So it is usually a moment initiative drive followed by a little bit of responsive activity and then initiative again. Maybe let me repeat again. Probably it's kind of an initiative down followed by a little bit of responsive and again initiative. Buyers will be showing a little bit of later. The initiative action will happen a little bit later. In the meantime, a slow and steady responsive activity will happen. Hardly it lasts for 10 minutes or 15 minutes or maximum up to 20 minutes, and then they start keep moving up. Most of the cases, what happens, there will be such kind of initiative drive down, and it becomes one inside bar. There are many cases we have seen they took a straight away initiative drive also. So when that inside bar forms, you want to have to take an immediate long and keep a stop loss at day low and keeps moving up, because it also matters how the price is falling. So one of the recent example I had seen probably 2 months back and also last month back. So two such patterns I had seen. Probably I can explain from the whiteboard because I don't have the live recording of those things, because those data is there in GDFL, and GDFL provides only 2 days of information. So that is the reason I took primarily eSignal to record all those information. Otherwise, it doesn't matter whether GDFL or eSignal boards, I'm getting the same information. So I'm going to explain what happened some time back. One of the day, if possible, I'll show you in the candlestick charts how the activity came on a 5-minute time frame. That is during January, I believe. So let me share the screen over here. So look at this whiteboard example. Okay, so one of the day, what happens? We have a 2-day low. So this is one day low. So this is day. Assume that this is previous day. Assume that's a daily candle. Previous day low. This day low, and previous day high. Okay, day high. Similarly, I'm gonna draw one more high, saying that this is my 2-day low and 2-day high. This is my 2-day low. 2-day low. So what happened is that one of the day price started doing some sideways activity. Price was doing some sideways activity, and middle of the day they started falling. All these sideways activity happened with ultra low volume. It's not a responsive activity. It's more of a consolidation. Price opens and it was consolidating, and the price was going down with very low volume, low volume, low volume. This is up to middle of the day. It was falling very slowly, and then around 12:30 it picks up faster. So faster candles, you started seeing big volume with bigger candle. Almost they've broken one more candle with day low. Previous day low has been taken out with big volume. Again, a decent volume. It's not a trap buyer volume or a trap seller volume. the volume was relatively big, probably in terms of 3,000 lots or 2,500 lots. Whereas these lots are around 400 lots, 500 lots, 750 lots, less than 1,500 lots. I mean, I would say that it's more of a low volume activity. Price started dripping down, again dripping down, again dripping down. When it drips down, the volume was relatively big. The volume was relatively big, and there it forms an inside bar. It forms a momentum auction reversal setup, and the next candle was like they're flying like this. They went like this, and they went like this. They also broken the previous day high also. Right, so these kinds of places where MR will be very much helpful, where you know that immediately it could be a trend reversal. Immediately it could be a trend reversal, but then the way they move the market, it's so fast, and then you know that most of the players would have been get trapped over here. Most of the small traders would have been trapped over there by looking into the price falling that fast, and especially the last candle, which will be falling really, really fast with a bigger volume. But if you have an idea about what the delta has been doing, you know that it's nothing but an initiative to initiative option, and moreover, it's a combination of an initiate momentum auction reversal setup, one form of where momentum exhaustion happens, and then trend reversal started happening on the other side. Right, so it is also came up in the form of a stop hunting. Probably I'll show you in somewhere in Jan, in Nifty or Bank Nifty. Let me show you from the candlestick perspective how the charts looks like. Let me switch over to the screen. Okay, so if you look from the screen, I believe let me take a 30-minute charts. A 5-minute chart should be doing good. Mostly in Jan. It was a kind of a fake breakout, but recovery was really strong. I think this is the day. So one of the day here, into this information, most likely Jan 15th, I will. Okay. So here was the 2-day low. So this is Jan 15th low. Jan 15th low. Okay. There are a lot of setups we observed in January, because January we used to do a trade session where we watch these kinds of levels, right? So this is Jan 15th low, and this is Jan 16th low, right? Jan 16th low was somewhere over here, somewhere over. This is Jan 16th low, right? Jan 16th low, right? So price opened bit above that. You see that it forms a momentum auction reversal. It forms a one form of a momentum auction reversal. If you look from the order flow charts, it would have been clear that it is one form of an MR. This is one form of an MR. MR, because volumes are relatively big. Delta was also relatively big on that particular day. You see the volumes were closely how many lots? Probably this is Bank Nifty, so I have to divide the lot size by 20. So volume in this candle was relatively 246. I don't think so. It's 246. Something is wrong. Yeah, volume is almost 4,920. Am I in a 5-minute chart or what? Oh, okay, so I'm sorry, this is not a continuous contract, right? So this is so that's why volumes are pretty thin. But this is whatever I'm having here is a February contract. So maybe if one is looking into the Jan 17 contract, right? Or maybe I'll show you how that particular day looks like. When they are breaking the day low, they're literally breaking the day low with this big volume. Similar activity would have been seen in your charts. If you go and look into the charts on a continuous contract, you might be able to notice that there'll be a strong drop, followed by that an inside bar, with a big volume. So big volume, and then it becomes an MR. It was an MR at the open also. It was an MR at the open towards the short. It was a short sell-off, and the day low also is a one more MR. MR breaking the 2-day low is an one form of a day low, and then MR forms a 2-day low and MR forms. It's a potential reversal to move to the other side. It's a potential reversal to the other side. Most of the fake quotes happen in the form of a momentum auction reversal, right? So in order to simplify that, what we have done is that we have automated it. Now you'll be getting the signals in the form of MR over there. So I just suggested to this strategy is looking interesting. Can you code this? So he converted me into an MR here. So of course, it's not pretty visible. This is an whatever I'm having is a beta mode. So here is the MR short over here, which means a bigger quantity followed by an inside bar. All the condition get matches. So you don't need to check into the volumes. You don't need to look into the delta. You don't need to look into any of the thing. The moment it forms, automatically know that you know what to do. So always you'll be getting an alert, a sound alert, or a pop-up alert. Right? Of course, scanners is not possible because auto flow itself computationally intensive. We thought of building and scanners, but then scanner is quite challenging. But there are many trade locations where we find that this kind of MR comes. So let me to show you what are the places MR comes in Bank Nifty. So recently, how one can understand that where the MR is coming. So just squeeze the charts. Just squeeze the chart as much as possible, where you'll be able to see that MR longs, where the MR long is coming in. So yesterday, this is one of the signal we talked about it in a Slack. So there is an MR signal came over here, and potentially it took an retracement towards the VWAP levels. Right. So I guess many people, if you haven't onboarded to the Slack is our own private trading community where we discuss about. So it's called marketcalls.slack.com, where day in, day out, we talk about market profile patterns, order flow patterns. And there we also track pending OFA levels with trap buyers or trap seller volume, whether it has been hit or not. We tend to have such kind of information over there. And so let me go a bit back. I think the levels came somewhere around. Yeah, so this is where the moment MR alert got triggered, it triggered around 12.5 or so. So 12.9, I just posted that there was an MR long signal, and you see that it's a strong volatile bar, and then from kind of an inside bar. Volume was high. Volume was almost 4,769 volume in this particular bar alone. And second bar volume, it doesn't matter because it's an inside bar. Typically, it will be low volume, 1,500 or 800. It doesn't matter. It should be mostly low volumes, and which is mostly kind of an absorption of the selling. Followed by that, we will be start seeing momentum trend auction reversal over there, especially towards buys tend to move towards VWAP. That's the common phenomena we looked over there. So the failure rate is like almost 10 out of 10 trades, 3 trades could fail. But still, the most of the trades which we watched last 3 couple of months, it was doing some decent setups. So again, look at MR long here. This MR long over here, and the MR shorts over here. This MR shorts tend to move towards an VWAP levels. And these kind of MR, there are 2 failures in MR over here. If you look into the MR, as I said, you have to bifurcate how the MR is going to come. MR should come always with strong volumes, right? So if you are missing strong volumes there, so the volume, this is at the opening of the candle, and then inside bar. So this is a classic MR which went wrong, of course. Because of MR, you should not blindly take away with that. This is a MR. It's a legitimate MR. Your stop would have been 100 over here. The second MR, if you look at the second MR, that MR came up with absolutely. So you see this volumes over here. So when such kind of MRs are coming up with, it should be coming up with strong selling volumes, right? So strong selling volumes, but momentum is clearly missing over here. So the clear momentum is missing over here. Momentums are clearly missing over here. When the price is selling off, you'll be able to see a lot of selling volumes in this band, right? So but the volumes are it's a selling volume. It's a stacked selling volume, but still the volumes are kind of an less heavy over there. Whereas compared to the other places, if you look into the other places over here, something like this. So this kind of sell-off is what a legitimate sell-off is all about. So this kind of sell-off, even though stop got 100 over here, that's fine. But when the selling is happening, the tail end of the volume should be it should be having a lot of reds coming in this band, right? So a lot of reds at the tails. If you're not seeing that kind of red tails, then one can ignore that kind of patterns as it cannot be an MR at all. Like it will be on the long side or on the short side. The one which came in the late sell-off. Again, you can see another MR which formed over here. Not this one. One more. See this kind of in tick volumes. In tick volumes, they always plot as in low red color. So there's also one form of a trap seller. It's also one form of a trap seller. Right? That means immediately price could shoot back, but eventually they come down. But at the same time, you can see that the volumes are pretty heavy, and the tail ends are coming with heavy volumes. Tailwinds, heavy volume. Along with that, it should be coming up with momentum imbalance zones. So by that way, you'll be able to bifurcate some of the unwanted trades. Not every MR is tradable, but if you are blindly trading it, the win rate will be around 7:10. Like 7 trades out of 10 trades will be a winning trade. And there are other patterns. MR used to happen all the places. Many places it used to happen, right? So, but don't try to blindly follow only inside bars. With big volatility candle and the inside bar, don't blindly follow with that without using order flow information. Without using order flow information, without using this kind of delta information, you might be missing a lot of information over there. Like for example, let me go back and study some other MR levels. So there is an MR short. There's one more MR long over here, which is also a trapped buyer long. See that it's a trapped buyer long. It itself a long here, and then there is one more long confirmation coming over here, which is an add-on confirmation to MR long, right? But if you really look into that, there are no volumes traded over here. There is no potential sell-off. Only big orders got trapped at the day low. So I will not take a MR long over here because it's not MR long at all. An MR long, we need a strong volumes on the downside, but this is a kind of an before MR long, it had provided and trapped the seller quantity that itself and long towards the VWAP levels, right? So this is, you can skip this information. Let's go back and check are there any always squeeze and then you can check where the MR came. So that is one more MR short, and then it mean reverted back. Again, one more MR short, it means reverted back. One more MR short, it's a MR short, and then MR. Okay, this is a different signal. Maybe I'll talk about that tomorrow. So this is MR short, happens over here. You see that bigger volume, and then it's an inside bar, and then selling activity started coming in. So that's your primary target. And so these are the one which happens recently, right? So the RD signal is different signal. It's called the reversal delta. So probably I'll talk about it in the second part of the day. So let's look into this MR. So volumes are pretty heavy. right? So 1224. So it is also momentum is there. So 132, 127, 1244. Momentum is there. So it's an MR short. Also, it is a trapped buyer long also. So you can see that that level 2705 would have been came sometime later part of the day. So if I draw a line over here saying that it's a trapped seller, sorry, trap seller at the day high. Some other part of the day they would have been come and tested over there. So you see that some activity would have been happened over there. Even though temporarily it was going down, it went down very deeper from there, right? So the price went down pretty deeper from that level. I'm seeing something. To compress. Yeah. And avoid taking any MR chart which is coming after 3 o'clock, right? So it doesn't has any much of a meaning to it. And there was one more MR chart. It was a kind of a failure. There it is. It's an MR chart. So volumes are supporting, and it got a failure over here. So this is a failure one. You can see instead of going sideways, it was started doing a lot of activity over there, and then it hits the upper level. Otherwise, volume was decent. 3,700 lots. It's qualified for selling, and momentum buying was there. All the current conditions satisfied. Big delta was there, and despite that it's an inside bar, it tried to do a short over. It tried to open a short over here, and your stops would have been at 2752. So one would have been stopped out. So that is a 20-point stop would have been hit. One would have been forced to cut out their positions over there. So that's an MR patterns. So I'm just exploring only in the February. And one more MR long which happens at 325. Just you have to ignore it because 325 usually volumes will be pretty heavy, and so this kind of patterns might match very rare cases. But we are mostly interested in patterns which are coming at the day open. Most of the MR pattern comes during the day open. Like I'll show you what are the cases where the MR pattern you can anticipate. Let me open the whiteboard. Okay, so let's say this is my day's range. In many cases, you can find these kinds of MR patterns. This is my previous day high. And the previous day low. I assume that this day was a very bigger range day. In case of Nifty or Bank, assume that this is Nifty, some 100 points range. The day range was 100 points, and the price went down, closing at the day's low. Next day, what could happen is that price opens inside the bar. They took a straight drive. Probably by the time you would be seeing that Nifty would have been up by 50 points. First 5 minutes, they took a straight drive with a huge volume. And second 5 minute chart, assume that is a 5 minute chart. This is a 5 minute chart. 5 minute chart, and this is yesterday's high, and this is yesterday's low. And this is first bar. This is bar number 1. On the bar number 1, we got a straight up drive. There was a straight up drive with a huge volatility candle. Very good volatility, but still the entire 5 minutes would have been traded inside the previous day's range. The next bar forms an inside bar. It forms a momentum option reversal. So that is where one can look for an sell off over here. Like these kinds of patterns, I can show you a couple of places in Nifty. This month it had found, last month also it had found similar setups. At the opening itself, you have an opportunity to short the markets, especially when the price is opening inside the range and it took a straight drive. and next bar is an inside bar, and just without thinking, initiate a short and then monitor. So maybe from the candlestick chart perspective, it will be looking like this. Nifty, I think somewhere around February 12 or 13, it happened like that. Yeah, here. So look into this information over here. Let's say, let me share the screen. So this is AMI broker charts, and of course I can show it in Ninja Trader itself, but somehow I am obsessed with the bar charts using AMI broker. So here is the bar open. Here is the previous day low range. You can see first bar. Here is the previous day high and previous day low. So this is previous day high, and here is the previous day low. Here's the previous day low, and you see the first drive. The first drive is a bullish bar, followed by that an inside bar pattern. Volume was significantly high. Of course, you look into the delta. Delta is also really high, and it forms it forms these kind of corrections here. So that kind of patterns one will be able to identify. Again, the same time, second time also it repeated similar information in Nifty, I believe. So if I look onto the 13th February in Nifty, let me go back to Ninja Trader charts. On 13th February, Ninja Trader, 13th February. So here is 13th February. You can see an MR chart over here. There's 13th. Yeah, here. The opening itself an MR chart. Right, so the opening itself and short probably first 5 minutes itself you'll be able to learn that you should be shorting these markets. And I think a similar example happened in Bank Nifty also some 2 days back or 3 days back. So one more MR long came. They are very close to the targets, but then it got failed. This MR target has been like entry came around 10,767. Target is supposed to be 10,778. They came pretty close to 774, and then they got tied. Stop loss got hunted. So one of the plays when terrorist attack was happening, right? One of my favorite trades happened over here, somewhere over here, because it's a kind of a trapped buyer or something. No, it's a momentum auction reversal here because there was a huge selling quantity followed by an inside bar. It's one of the plays where a terrorist attack happened. By the time I took an MR signal over here because it's an MR. I don't know why. Probably the volumes, the delta is getting negative. That's why it's not plotting an MR. Otherwise, the delta was supposed to be positive in this candle. So there was a huge drop down, and then it forms a negativity. So a lot of absorption happens. You can see a lot of responsive activity is happening before they are taking up. So I took one of the long in this place. This is where the terrorist attack happened, and price used to started falling slowly. It was dripping down on that day. So on the terrorist attack day, because I can remember I was holding a long. I took a long by looking into this MR candle. I mean, I was already in long, but I added my first long over here and another long at 10,600 levels. I added over here. So twice I added my positional long. So one of the places I looked into the order flow and I thought like this is one of the plays a momentum auction reversal is happening over here. Supposed to be a momentum auction reversal, but the delta is somehow got squeezed over here. This is supposed to be a big delta. I don't know why. It becomes small. So this place was actually supposed to be an momentum auction reversal zone over here. Maybe you might check with your global data feeds or something. This particular day is more of an momentum auction. I'm sorry, I'm some temporary disconnection here. You're able to hear me? You people are able to hear me?
Yes.
Yeah, I'm sorry. So just narrate what was happening down there. So price was going down, and one of the place where I added my longs over here, positionally I added by looking into this, even though I know that it's intraday information, it usually mean revert towards the towards this VWAP levels. I took a positional long over here based upon the order flow. Order flow and other confirmation says that probably this could be a day low, right? That's the information I got it over there, and that particular day it ended up at somewhere around at the day high. Again, one more zone, one more MR long. It went towards the it went towards that VWAP levels. Again, one more long, MR long. Not much, but it's a very quick trade because markets are moving pretty slowly. Again, MR short over here. So those are very quick and scalp trades. Not every MR is going to give you an 1:5 or 1:10. Market has to be really volatile. 10 MR forms. That is where your maximum trading opportunity comes. And yes, as I said, sometimes MRs are days long. Not every MR is a day long. Some MRs are really a day low, or some MRs are really day high.
Rajendran, these MR signals are available with the order flow chart.
The MR signals are available with. They used to provide in order flow ultimate edition. Regular MR, one have to manually watch it out. These kinds of alerts, these MR alerts, these kinds of MR alerts, right? So it is available in order flow ultimate edition. So typically the signal will form once this the big volume is confirmed, and then inside bars is confirmed, delta matches. After all that setup, one have to closely look into that and then confirm that yes, it is an momentum buying. Then once the momentum buying is confirmed, one can initiate a trade over there. Just a bit of manual confirmation is required to take the trade, and where your stop loss always remains tight no matter what, right? So in this case, it's just 11 points, and the draw and a result was closely how much? Closely 40 points. Yeah, roughly around 40 points on the downside, right? So, and that, as I said, at times it can be a day's top or a day's bottom also. But that is very, very rare. That also to play that kind of setups, you need to have a market profile as an reference level. Most of the time, it's gonna do towards the VWAP. And in fact, yesterday in Bank Nifty, it had done something twice or thrice, I think. Maybe Nifty, I believe. Nifty yesterday, it done almost. This is one place it happened, and probably okay, not much. Only one signal yesterday. So MR signals happens very frequently. Last month we almost closely spotted 10 with our naked eyes. Almost 10, 5 in Nifty and 5 in Bank Nifty. Probably with signals, one would have doing a lot much better. Right, so and it happens in and it happens in stocks also. I'll show you where it happens in stocks. Something like in mostly it happens in stocks or in indices, especially when the price is hitting a 200-day moving average. Let's say let me put in a simple 200-day moving average. So I'll put an average.
In commodity also, I mean in crude.
It should, because the pattern is an universal pattern.
Any examples if possible?
I don't have access to commodity charts as of now.
Okay.
So let's say, and I don't trade commodities also, by the way.
Okay.
Sometime back in Zeal, it used to happen. Just once I was monitoring Zeal. It comes pretty close to the 200-day moving average. Yeah, one of the places like this. Many times I'd seen in the past, right? So this is one of the places where you can see that momentum auction reversal is happening with a high volume. Maybe if I open order flow charts, I'll be able to say clearly that what is happening over here. But without looking into the order flow charts, like you see a drop, a big drop over here that is transformed into bigger volume. It's breaking the 200-day moving average. Many people used to keep a stop loss around 200-day moving average, right? So again, a reversal inside bar. Most likely, if you look at the order flow charts, it will be an kind of a momentum auction reversal zone. Right? So those gives you an potential scalping zones in stocks. So again, you can see one more momentum auction reversal zones over here. But volumes are not supporting, but comes around very close to the 200-day moving average. And if I take Bank Nifty, sometime back in Bank Nifty, it comes over here at 200-day moving average.
Rajendranji, for Monday, Bell TPO is required for me.
Your good name?
Rangacharya, for Monday session, it is practical. No? What software I shall load in? Bell TPO required?
Yeah, Bell TPO, you can take a trial. If you don't, if you haven't subscribed yet, you can take a trial. One week trial is allowed for all the clients. That's
okay, anyhow, yeah. That is one is enough. Anything else is required? Only Bell TPO?
So that one is enough. That's one is more than enough.
First, let me start with the 1 week trial, then we'll see.
Sure.
Later on, what shall I move to? Which package I can take?
So if you're a beginner, always go with the basic version. Or if you want to, if you are very comfortable with the momentum auction reversal setup, you want automated alerts, then in that case, you can go for an ultimate.
Which one?
Ultimate, order flow ultimate.
Ultimate. How much it may cost?
No, you just please check with Vinod.
Yeah. Now, roughly, I'm asking. No, not exactly.
I think around 80,000
per annum.
No, it's one-time license.
80,000 per one-time license. Okay.
Yes. Data feed will be coming on month charges.
Basic maybe is lesser, no?
Yeah.
The data feeds they are giving? No.
They do provide. Bell TPO they do provide. They provide mostly true data, and we supply mostly Google data feeds.
Okay.
So this is Bank Nifty charts, and a couple of days back we've seen this. Yeah. So one of the places where you can see when the price is hitting one of the zone where it is creating a momentum auction reversal. Not every place every time it's going to hit a 200-day moving average, you're not going to see. But when it is hitting a 200-day moving average with a high volatility candle, the next bar is an inside bar. There are all odds that it could go completely turned down, right? Positionally or from an intraday perspective. Also, intraday perspective it means towards the VWAP, but from a positional trading perspective also, it's still it's still an complete downtrend from there. So every time an 200-day moving average. So there are three locations which we are watching continuously. So if I could summarize, those three locations are like one at the open of the candle. One have to observe whether it is a momentum auction reversal or not. And second is at 200 MA. MA is, if it's coming with an if it's crossing with a big momentum bar, right? And there one should be looking whether if it's coming with a high volume. Many traders like to trade. So many traders, even experienced traders, they trade whenever the 200-day moving average is crossed with a big volume. Many people will put their fingers there. But if you know the simple, subtle nuances, you could be taking in contra positions against them. Right. So again, the third location is especially when day high or day low or a 2-day high or a 2-day low, which usually comes with a slow break initially, and then over a period of time it gets faster and faster and faster. The middle of the day is mostly these day high, day low breaks are mostly midday breaks. Mostly they are midday breaks. They don't break immediately. So maybe they'll be trading inside the range for a long period, and then probably around 12 o'clock or 12:30 or 1 o'clock or 1:30 they come and break. Typically around 12:30 to 1:30 is what you will be expecting a day low break I mean yesterday's low break or yesterday's high break, and that comes with a huge volume in the last 5-minute candle, and then it forms an inside bar. They completely topsy-turvy in the second half. Again, it also comes in a 2-day low, 2-day low or high, or multi-day low. So multi-day low or high, you can anticipate these kinds of patterns. So these are the repeated places where we are seeing these kinds of patterns over there, not at every other location. Right. So sometimes, yeah, it comes around 11:30, but then it usually it's not a day low. Usually it reverts towards the VWAP and then it dies again. So those are the places. If it's coming at any other places, you should consider from an test towards only VWAP. You should be out of the game. But if it is coming at a 200-day moving average, or if it's coming at the opening of the candle, or if it's coming at the day higher, day low break, these are the places where it has bigger opportunities. Other places, if it is coming, it has fairly low opportunities, whereas these trade locations have very big opportunities. Or maybe I haven't experimented with many indicators. Maybe let's say a Bollinger Band. You're putting a Bollinger Band, and this could be one of the high end of the Bollinger Band, right? So it can be applied there as well. Right. So any questions on this? Any questions on momentum auction reversals? Otherwise, we can take a 15-minute break and we can resume back by 4 o'clock. Maybe a minute break. I can take a couple of questions.
Hello.
Yeah.
Is the bid and ask imbalance range for stocks?
Bid and ask imbalance. So that is where we go for a relative volume, right? So
For stocks, can you please suggest what would be the range? Here we are considering 10 as imbalance.
See, one of the easiest way is that you take a bar charts to check what is the relative volume. Let's say take Reliance for an example.
Yeah.
What is the lot size of Reliance? 500.
Okay.
500 or 1500?
1,000.
1000, no. Some of the volumes are coming as 500.
500.
Yeah, 500. So slash 500. So divide that with the number of lots. So usually you'll get the lot size. You can see it typically. If you take a median over there, take a median over here, you can see most of the high volume category, it's all relative volume. So anything above 1,000 lots getting transacted in one single 5-minute chart, right? That can be considered as a bigger volume. Then in that case, possibly one chart, some 500 lots, if somebody is punching, or 200 lots somebody is punching, that can be considered as a bigger volume there, right? So it is all relative. And you will come to know, once you start studying the script, you will come to know what is the relative volume for Reliance. For example, something like Zeal. Zeal, the lot size is 1,300. So I'll make it as 1,300 over here. Yeah. So in this case, you will know that somewhere around lot size here is the median was over here. Not every place is the higher lots got traded. So around 1,000 lots in a 5-minute candle, which is happening, is pretty huge. So anything which is above that should be a high volume. So going by your past experience, anything above 1,000 lots is always 1,000 lots happening in a 5-minute candle. I'm talking about a 5-minute candle. Okay.
Okay.
Yeah. So that could be a bigger volume here. So it's a very simple study. You just go back and check the volume, and you'll know that. Then you can go and come into the order flow, and you can check whether compared to your 1,000 levels. Let us assume that these are the zones. How many lots are happening over here? Hardly 35 lots, 18 lots, 20 lots, 69 lots. Right? So these are very low transaction, and you can see that not much serious money is there. There is no serious money there. There are only 25 lots, 30 lots. But look at these places: 384 lots, 856 lots. It's a good volume, but it's the bigger volume is around. So this is an okay kind of volume, and this is also kind of a bigger volume, slightly bigger volume, 800 lots, which is transacting at a 5-minute charts, which is probably some big buyers are there, or big sellers are there, and so 1,421, it's big volume, right? So using that, you will know that it's a trapped buyer or a trapped seller. So always it is one can measure from relative terms. It differs for the script to script, and And in our case, right? So in the momentum auction reversal setup, it will not look into the relative volume. It will always look from the relative to the last 5 bar volume. So one have to really look whether it's a high volatility candle or not. The candle, high volatility candle, also measured in terms of last 5 bar range, and the delta is also measured from last 5 bar range. So usually it matches. Very rarely it can be an low volatility candle or an very rarely that cannot be a pattern at all. So one have to confirm with manual eyes, making sure that the relative volume is good. First, as a user, you should know that what is the relative volume for Nifty, what is the relative volume for Bank Nifty, what is the volume for, if you want to trade Reliance, what is the relative volume for Reliance. If you want to trade Zeal, what is the relative volume for Zeal. Right? So once you understand that, then in that case you'll be able to go and play the game better. I would say that.
Thank you.
Yeah. Any other questions? Okay, in this case, you can see here there is an momentum auction reversal happening with 500 lots. So probably while you are understanding that, you should be able to see in a position that whether this 500 is an bigger volume or not, right? Then only you'll be able to take a conclusion that whether it's a momentum auction reversal or not. Then look into this volume. This is bigger volume, and then we need to check really what happened over there. This is quite looking interesting. Bigger volume, not an inside bar, but probably some other pattern would have been found over here. Maybe tomorrow we'll check out what patterns found over here. There was big volume, and then kind of an responsive activity, and then followed by that slow and steady sell-off. So let's look into the second half, what happened over there, right? So let's complete the break, and then we'll come back and we'll study the Reliance charts, right? So how to see the Reliance chart, how to add out of the information, and what are the settings one have to do, how one can do the settings, everything I will show you. Thank you. Till then I'll be on mute, and I'll be pausing the recording for quite some time. Yeah, so I'm back here. So let's quickly look into the. Okay, there's a question from Pradeep. How do you define a volatile candle from a programming consideration? So we're just looking into the range of the last 5 bars or 12 bars range, which you can define from the setup over here. Go to indicators. So here all these controls are available. So volatility MR multiples, you can give the volatility multiple, which will compute how big the volatility is supposed to be, and MR volume sum bar count, and then delta bar count, how many times it has to be there, and then volume multiple. So compared to the inside bar and the high volatile bar, how many multiple times the volume should be. So by default, I would like to take it as 1, 1, 1, and 1. So if at all you want to set a higher range bar, you can set it as an 2. That will, in terms of factor, you'll be able to set how bigger the volatile bars you want. So all these are software-based controls. So where one can be able to say that it is a high volatile bar or not, that has been mathematically coded. So as a user, one need not to be worried about all those setups. Right, so okay, so let's get back into the basics again. Right, so we always going in parallel, like we'll talk some basics, and then on top of the basics we'll be talking some strategies. Again, we'll take some basics and then we'll talk about some strategies over here. That's how I feel it makes people too comfortable. It may not be boring also. Otherwise, it's order flow is one vague subject. Otherwise, if you really want to know more about order flow stuff, so what one can do is that one can go and learn about this book, the book name called Market Microstructure. Right, so structure. So it is one of the book which is highly recommended for to learn about how the order works, how the iceberg order works, what is VWAP, how the institutional levels they handle the iceberg orders. So it's from the trading exchanges from Harris. So this is mostly recommended from. These are 2 books there. So one is Market Microstructure in Practice. Market Microstructure in Practice. this particular book. Okay, again from there are two books are highly recommended. One is Trading and Exchanges with Market Microstructure and Market Microstructure. So these two books, which helps you to learn how orders are dealt, right? So how the market function, market microstructure works. Usually it's mostly, and most of the HFT players, they go and study this book for to knowing how the order works, how the order book functions, how the order matching happens, right? How the liquidity, how the market price travels in a low liquidity zones, how the price travels in a high liquidity zones, right? So those are the core foundation for the order book, right? So if you, core foundation to know order flow much better. A lot of there in theory, it has been time tested. The market microstructure, almost every high frequency trader goes through this book before they started playing in the HFT world. In the HFT quant world, without knowing market microstructure, you cannot deal orders at millisecond levels. So, and that is a basic foundation for order flow as well, to understand how the interaction happens between the market order and the limit order, where the big liquidity and where the how the price travels in the low liquidity zones. Now, coming back to the concepts, right? So we talked about the delta flow, that is one form of chart, and which we'll be using for delta packet positioning and delta unwinding, which we'll be discussing in tomorrow's session. And the second one is the low liquidity zones, where you can see a lot of zeros in between the zones. One of the examples where we had seen is where the stop hunting happened, and many times you can see that those levels are most likely some sort of critical levels. These levels could be some 200-day moving average, or this level could be previous day high, previous day low, or multi-day high, multi-day low. So when such levels are forming up, it has to be really, it creates a lot of zeros when the day high is going to broke, and many traders will go and sell emotionally, right? So one should not do that, because price always comes and clear those stop hunting zones, right? So those are, we call that as an exhaustive zones. It makes an exhaustive high or an exhaustive low, and it left a lot of zeros in between. Especially those are very crucial zones, like in previous day high, or today low, or 2-day low, or multi-day low. When it's breaking, usually stop hunting would have been happened. But when it is happening, even if you want to short, don't go and short it immediately, because you short it, price always moves against you, right? So these levels always have a high probability to get a fill over here when you're seeing a lot of zeros and then price keeps going down. So one of the such example I'm going to show you. One of the examples I can show you in the form of Dr. Reddy. Recently, Dr. Reddy, there was a 30% crash. What I done is that I took a screenshot of how the price travels in a low liquidity zones. Right. So here is the order flow visualization of a liquidity crisis, where price used to go down with very low volumes, initially with big volume, but when the price started going down and down and down further, very low volumes, hardly 200 lots or 100 lots, had created 15% of the crash. Right. So just this is the visualization of the Dr. Reddy 30% crash visualization. So this is some time back. You can see the price was, the Dr. Reddy was coming close to the previous day low. So this is Dr. Reddy February 2019 features, and I just compressed it to see. You can see a lot of liquid zones are coming in. You see a lot of white spaces. Those white spaces are the places where there are no volumes got traded over there. No volumes here, no volumes here. This price just keeps going down and down. See, very less volume transaction is happening over there. Let me fast forward. See, mostly it's filling with zeros. When you're seeing lot and lots of zeros, that means price is traveling. As you know, that price is traveling in a very low liquid zones, and that's kind of an initiative auction. And what happened on that day is that a momentum downtrend has been compensated with a momentum uptrend, a kind of a momentum reversal which you have seen initiative drive to initiative drive. It's what it happened in Dr. Reddy. So what you're watching is a 5-minute time frame charts, and you can see price almost slided some 140 points from the day high, 140, 150 points. It had taken down multi-day low, price breaking multi-day low, and it was just simply crashing. Let me fast forward here. So you can see red stripes there where sell orders fills are there, where more sell order fills are there, and green stripes are nothing but what? Momentum buyers. Look closer, most of them are filled with zeros. So means price is traveling in a very low liquid zone. And you can also see parallelly here, there are a lot of unfinished business levels over here. I'm going to talk about that today because there is some interesting opportunity there in Nifty as well. See, there are a lot of unfinished auction levels. When such kind of levels are more and more there, right? So temporarily the price might crash, but eventually they will retrace it back. So price was crashing. This crash was getting heavy, like almost now price has been closely crashed around 200 points from the day high, 100, 150 points from the day high. Again, it just keeps going down. So now the intensity of the drop is getting faster. Like as price is traveling in a very low liquidity zones. And you see that. So these are the places dangerous to go and buy it without knowing the context. You need some sort of an price to get stopped by some sort of an absorption, right? Without having absorption, going and fighting in front of the initiative action is highly vulnerable. At least some sort of an inside bar, some sort of something should have been there. Otherwise, following the catching knife always not recommended.
Can we identify dumb money and smart money here, Mr. Rajendran?
Dumb money always panickingly comes at the last. So you can see like low volume happens at the day low. Hardly, as I said, 120 lots got traded at the day low. But these volumes are coming really heavy. So price is traveling in a low liquid zones, but still volumes on that candle are quite heavy. Almost 4,000 lots or 5,000 lots got traded in Dr. Reddy alone in that particular candle.
You mean, but you are saying high volumes but low liquidity zones. What is the?
Yeah. Means there are prices traveling really fast, and each and every level, let's say 10 lots like that, from 100 places it got traded. So means each and every level, nobody is willing to supply more quantity over there. So only 10 lots are there, it got eaten up, and then it's moving to the next level. It got another 10 lots, again moving down, again 10 lots. Like that, it just keeps on going down faster. So that is a low liquid zone. That is why price is able to travel faster. In high liquid zones, price will not be able to travel faster unless it is coming up with high volumes. High volume zones, price can travel faster also, but at the same time, the aggressive buyer also coming up with a high quantity. Here, the buyers are low quantity, the limit order book also having low quantity, but still price is traveling in a low zone. That is why price is still able to drop faster. Almost. Still, it is an initiative drive. So as long as it is an initiative drive, one should not be fighting with the markets. Either go in the direction or better don't. Don't try to catch these kinds of initiative drive falling. It's kind of catching the falling as good as. Again, almost 300 points crash over there. You can see now the intensity is going faster. From 230, right? It takes only hardly 20 seconds to do this activity. So from 220 onwards, price was made. So all these are happening in a couple of seconds. Just a couple of seconds, most of the damage is done. And 20 seconds later, they are back to the same levels. In fact, it formed a momentum auction reversal also. It's a huge volume. The delta was huge, and the second bar is an inside bar. And you can see here the day is low. There are many gaps are there. Hardly some. I would say that some 10 or 20 trades would have been happened in this level. Only 10 or 20 trades would have been happened in this entire band. And the market haven't given much time, and price started coming and closing around over here. So the next candle opened, and it becomes an. It's most likely an initiative to initiative, which also comes in the form of an inside bar. That inside bar was quite lengthier. Like, I'm sorry. Inside bar came quite lengthier, but it's still in momentum auction reversal zones. End of the day, what they done is that they went on testing towards that unfinished auction levels. So they went on testing towards the auction levels. But you can see by looking into the charts, you can see that until then, the order book is filled with tight levels. You can see a lot of stripes coming over here. So many stripes are coming in this band. Now we see that the stripes are getting less and less. Less stripes. Again, price is crashing like this. Again, some more stripes. Market is finding liquidity around this band. Everything is getting eaten up. So you can see this particular band, some liquidity is coming up. And again, liquidity drop before taking a reversal. So what you can learn from this is that when there is an liquidity crisis, price tend to go down. So maybe one of the reasons why your order might get skipped. The order might get skipped because you might place an SL limit order before it comes to the trigger, before your trigger hits. In the meantime, the market would have been jumped to the next level. So that is why the order gets skipped. Even if you have a SL limit order, your order having the potential to skip away from it. But anyways, that's always part of the game in a high volatile markets, especially which is showing such kind of illiquid price moves. So what could possibly happen in this case is that the most of the order book on the sell side would have been completely flushed, and the entire order book, the players would have been wiped out, and then it forms an momentum auction reversal, and then they move to the other side. So it's basically an initiative drive downside followed by initiative drive on the upside, kind of a V-shaped reversal. And then, so many people will try to go and short over here, thinking without knowing what happened. But still, they'll find it as a value opportunity. So they will think that it's going to go down. But again, if you know what the price is doing, no matter what, even in a high volatile market, you will know that it is risky to go long. Also, it is risky to go short. Also, so it's most likely risky to stay away from these kinds of. One should stay away from these kinds of positions, especially while watching the price. It's kind of such a risky game to play on both the sides. Yeah, but it was mostly favorable towards long, even though it's okay to miss such kind of high risk opportunity. It's a high risk, high return kind of trades. One should, I mean, at least my personality will not suit to take this kind of risk. Okay, so it's a high volatile candle. The second candle also high volatile candle, but relatively it is an inside bar. So that it also made a day low. So that means it's an MR reversal, and that's the bottom has been done so far till now. That's the bottom for in Dr. Reddy. So the purpose why I shown you is that there are a lot of zero liquid zones, right? So there are a lot of zero liquid zones, but all the liquid zones got filled in Dr. Reddy, right? That's the one thing you have to understand over there. And there are a lot of analysis which says that, especially one of the analysis is the UAH levels, unfinished auction levels. So I'm going to explain now what is an unfinished auction levels, where we have specific strategies on unfinished auction levels also. So what I'm going to do now is that I'm going to right click and I'll go to indicators. As of now, unfinished auction levels are not enabled. I'm going to enable it. So let's take unfinished auction levels, and those levels are nothing but automated reference lines. And again, it is available in AutoFlow Ultimate version. So where those levels, how many days you want to extend. So that level, once the level got found, it will be follow like a reference line automatically. And as long as it is not touched in the next 2 days, it keeps continuing. Right? So I'll apply it. It's one way where we can identify poor auction. We could say that it's not a good auction. It always called as a poor auction. So when such kind of poor auctions are there, you can see there is one level at 10,825, right? So 10,825 on the top.
Mr. Rajendran,
Yes.
this zero liquidity, ultimately, what are the points to be noted? When to trade and not to trade?
Especially when day high is broken with a liquidity break, with zero liquidity break. Don't try to go short. Probably look for a position where one can look for a long opportunity. Right? Shorting is what you'll be part of the weaker hand crowd.
Now you said mostly it may fail. It is risky. Sorry.
No, I never said mostly it will fail. Mostly it will come and refill those levels.
So it is risky, you said sometime. Okay.
I'm not saying that it is risky. It is risky to go in the direction of the
Okay.
stop hunting.
Right. That means we have to go by for long. Okay.
Yeah, if you're following it, probably the only emotional crowd, they do like that. They all of a sudden, the day low would have been broken just like that. And then they come and try to take a position. Most likely, their opportunity in the market is very, very minimal there.
Yes, yes.
Right? So, because again, price come back to those levels. If at all you want to short again, you wait for the place to get a fill. Or if you're coming and if you're coming and entering over there at the day low break, then ensure that you're taking a quicker exit. So maybe you cannot. That is not a better trade location at all, especially when a stop hunting is happening and then you entered and price coming to your favor is that's scenario is very, very less.
Right, right.
Yeah.
And second thing is you are combining these two.
I'm getting a lot of echo.
You are combining zero liquidity and MAR ones, no? Both are applicable here.
Yeah, at times it depends upon what are the other scenarios are all.
Is the Dr. Reddy? I think both are applicable.
Yeah, Dr. Reddy, it was breaking with low liquidity zones many places, right? So, but what is happening? That kind of liquidity crisis comes. Price goes deeper, but no matter what, they usually comes and clear all those reference levels.
Yeah, yeah.
When such kind of liquidity crisis happens, unless it is not triggering margin selling, something like that.
Okay. Right. Thank you.
So look into this scenario here. So this is we call it as an unfinished auction levels. It's one of my favorite levels as well, which will decide me whether should I have to end my trade or should I have to trade against the position, or should I have to step out of my longs or shorts. So I'm also using positionally this level. So far doing wonders. First, we'll try to understand what is unfinished business. Right? Unfinished business is what, like, if you look into the most of the candles, you'll be seeing a zero on the left-hand side, on the sell side, and zero on the buy side. So most of the levels, you can see this zeros coming on both the sides. Zeros.
Be a bit loud, Mr. Rajendran. Again, same problem.
Come again?
Be a bit loud.
Voice
is the problem.
I was a bit louder. How about now?
You can be a bit clear.
Okay. Okay, I'll be a bit louder then. Fine? Yeah. So look at this example. The session will be keep on going till 5 o'clock, probably another 40 minutes or so. We'll be finishing most of the basics. But see, look into this example here. As I said, most of the top left and bottom right have the zeros. Right? That's how AutoFlow has been there in most of the cases. Like, whereas if many cases, you can see that you'll be finding a number over here. You'll be finding a number over here. You'll be finding a number over here.
Good.
Especially on the top left and the bottom right. If you're finding numbers, that will be automatically converted into levels. So you can see that the level 7 over here, that is considered as one of the level. Usually these kinds of levels get cleared intraday itself. Usually these kinds of levels got a clear intraday itself. No matter what, it gets cleared intraday. But some days what happens, it might left a lot of reference levels. If I compress everything, it might leave a lot of reference levels. So those are the auction says that they are part of emotional buying crowd. Right? So you can see there are how many levels got left. It's almost 1, 2, 3, 4, 5, 6. Many levels are there. So now it is risky to hold longs. It's risky to hold longs because one of the reasons I quit my longs on last Friday. I went neutral because always what happens is that most of the time it clears and then bounces back. Right. So when such kind of levels are there, for example, same levels are there in Bank Nifty on Thursday. Let me enable unfinished business. So you can ask questions why the levels are so important and why the levels have to revisit back. So the levels usually are an indication that it is a poor facilitation of a trade. If you're finding a good facilitation, maybe you'll be finding a zero at the top left and the bottom right, you'll be finding zeros. If you're not finding a zeros over there, that is one of the sign that it's a poorly completed auction, right? So that is one of the primary reasons why price will go back to clear those reference level. And I'm very much concerned, especially when I'm not bothered about single reference level because it always comes and it always clears. Now you can see there are a lot of green levels are there. I'll be mostly focusing on towards the long side in Bank Nifty. Right. At the same time, I'm also cautious on Nifty on the downside. So immediately you can see this is last Friday. This last Friday, you can see the number of levels which we got before Friday levels. All those levels, most of the levels got a clear now. And similarly, there are many places it comes with more buy levels. Most buy levels, it got a stretch of clear. And there are certain reference levels. Wherever the reference level is there, price tend to go and clear those reference levels. Right. And many reference level which is coming on the downside. If more and more reference level are going to come on the downside, you see in this case, when the price is going up, this price is going up, it was leaving a lot of unfinished levels, unfinished levels, unfinished levels, unfinished levels, unfinished levels, unfinished levels. When it is keep on leaving a lot of unfinished levels, all these levels got happened in 2 days time. All these levels got to happen in a 2 days time. And you see the way they're coming and clearing, they go and clear all those reference levels, no matter what. So when such kind of levels are there, you know what to expect in the markets. And again, you can see wherever such kind of unfinished levels are there, every other level would have been got a clear. So this level, it got a clear. There are downside levels, it got a clear on the downside. And again, so there are a couple of levels. This level was extending for 2 days, but yes, it got cleared on the 4th day or so, it got cleared. So likewise, we'll be tracking my concern is that are there any bigger reference level? Are there any such bigger reference level? So now we have a bigger reference level in Bank Nifty on the upper side. Almost all the downside level got a clear. Most of the downside level got a clear, but look at the upside level. There was almost 1, 2, 3, 4, 5, 6, 7, 8, 9 levels. So I might be thinking about long. In fact, it also ends with an MR long. So I'll be very curious to watch out what Bank Nifty is about to do. Or I might be willing to do if more activity started doing here. I might be thinking of looking for this activity. But at the same time, I'm also I had a long in Nifty, so I completely closed out my long. I'm willing to take further longs here, but temporarily I'm seeing a risk of holding moving down because you see a lot of reference levels are there. Well, this is still some 60, 70 points, unless they can bounce back. But I'm seeing this as an immediate threat to hold a position when the price is having these kinds of reference levels. Right? So these kinds of reference level, they don't arrive, and especially when it is coming up, you should be in a very cautious mode. So which is not a good sign at all. Which is not a good sign at all. So I prefer to stay away from such kind of reference levels. So I'm mostly a positional trader. So by looking into this information, I said I closed all my open positions in my Nifty, closed my longs, and then I'm okay to trade longs now in Bank Nifty, right? So, but not in Nifty yet. I'm okay to trade because of this information. Because of this information, I don't want to trade longs in Nifty, but the same time, if you look into the Bank Nifty, I'm okay to trade longs in Bank Nifty.
Raj, one doubt.
Yeah.
If this is the 5 minutes time frame, if you change the time frame, will this line go to a greater extent, or will remain same?
Let's say I'll move to 15-minute time frame. Maybe number of lines will get reduced. I think so.
But the range will move. For example, if 2700 seems to be the green line, topmost green line,
No, it's not change.
so that price range will remain
Maybe
same.
some of the lines might go away, but the levels will not change.
Okay, fine. Thank you.
Right. So again, let's say even if I go to 30-minute time frame, the same levels would be there, but maybe the number of levels would be very less. So 1 and 2 and 3 and 4. Earlier it was some more than 9 or so. Now that level has been reduced to only 4 levels now.
If
Right?
there is a 0 on either side and a volume on either side, what does it mean? Is it unfinished auction?
Yeah, it's an unfinished auction. If either side 0 means you, let's take an example here. Let me go back to 5-minute time frame charts. Okay.
That way.
Which example you are saying 0 on the either side? So you're saying like both the sides are 0? I think some of the extreme location it could happen, especially yeah, here. I think you're talking about this one, right? So let me delete this for time being. No, let me move for time being. Probably you're talking about this one. There are 2 zeros over here. Are you asking that is an unfinished business?
No, not that one. Actually,
That is not.
Let us say here, and on the next candle, you can see 0 here on the right side and 25 on the left side.
Yeah, the top one, wherever you are seeing a number on the left hand side, that top is the unfinished auction, which is which usually it's not trading opportunity most of the time. Most of the time it comes and it got cleared most of the time. But sometimes the level like this, the level like this, it creates an opportunity to fade or down. So probably I'll show you one of the example how it looks like during live market hours.
So, Mr. Rajendran, even one lot
traded in that zone is unfinished auction.
Yes, exactly.
Top left for sell and bottom right for buy. Instead of 0, even if there's one lot traded there, it's unfinished.
Even one lot got traded also if you're unfinished business.
Okay. Okay.
That usually happens in the form of a quick reversal. So whenever such quick reversal are happening, price used to come and clear those levels.
Will the number higher the number or lower the number have any significance on?
Oh, no.
Nothing. Okay.
Mostly 90-95% of the levels gets cleared.
Okay.
When more and more reference levels are there, that's one of the place where you should stay away from trading in that zone. I personally stayed away. I have a long opinion now towards 10,900, but I don't want to take right now because I see it as a threat because of too many unfinished auction levels. So I went neutral on Friday. Just look into this example.
No, what I understand is,
please mute me.
Mr. Rajendran.
Yeah.
Just a small this one. What I understand is here, let us say in 1205 candle.
Yes.
On the left side it is 0 and on the right side is 10, buying side.
No, top left, okay? Top left should be 0 and bottom right should be 0.
And then this is a finished auction, huh?
No. This is a normal candle. If it is an unfinished auction, you will be having levels either on the top left or on the bottom right.
Means can we say 1155 candle, you can see at the top 47 and 19, this is unfinished auction, right?
Which candle number?
1155.
1155. No, that is half of the candle has been cut off. It's still not the complete candle. Some candle are still on the above. Price went still even more above. So.
Or else you see 12:30 candle where 10 and 11 are there.
No, as of now on the screen there are no unfinished business. So you can see here the 10 and 11. Yeah, it forms an unfinished auction. It forms only after the complete of the candle. So candle completion, there was one unfinished business. Now price starts going down. Price always revisits back those levels.
No, actually, I'm not able to get you what you want to convey. Actually, unfinished auction is just, can you put it in a simple single line?
Unfinished auction levels always tend to revisit back.
Okay, right. Can you show a striking example here?
That's what I'm trying to show. That is what I'm trying to convey here. Now, what we are seeing in the video is that the unfinished auction level came and price is going down. Now, let's see how the price is going down. Okay, when the price is going down, now you see that price, the deviation is almost now 26 points, and now still it just keeps going down.
So one question.
Yeah.
So does the order flow unfinished auction has to match with market profile poor, high and low?
No. Poor high, poor low is completely different from unfinished auction. It's one way of poor reference. We can say that poor reference at each and every 5-minute cap.
Okay, got it.
Hello, sir.
Yeah.
For how many days it is valid? Unfinished business.
Especially single levels, then we'll be keeping it for only 2 days.
Okay.
If there are multiple levels happens, then maximum we'll be carry forwarding for 3 days or so.
Okay, thank you.
Sir, what is poor high and poor low?
Tomorrow we'll talk about that. Part of market profile.
Okay.
Again, price used to go down. How much ever they deeper went down, they returned back to clear those unfinished levels, which naturally used to happen most of the time. Right? So these kinds of unfinished auction levels, you can always see why the price has supposed to come towards those unfinished auction levels. Very rarely it gets skipped off.
Rajendra, just one question, follow up of the previous question. So,
yeah.
Without this automatic signals, how do you manually, I mean, I didn't get it clearly. Can you just repeat, how do you identify this unfinished levels?
We have to look closer and then you have to draw each and every reference lines. So I was doing it. When I was after observing only, we felt that some automated reference lines are required to monitor unfinished auction levels. So typically what market delta says is that typically it gets cleared within 30 minutes. But from my experience, it says that there are certain levels which are coming after 2:30. Whenever the unfinished auction levels are coming after 2:30, it may get cleared the next level also, next day also. But whenever it is happening with an exponential unfinished auction level, so these are the levels, I'll call it as an exponential auction level, which is right now exposing Nifty futures, right? Nifty futures, there are multiple unfinished business levels are there. So I'll call that as an exponential unfinished auction levels, which always has the more odds of coming down now rather than going up. So even if it can go up, but first of all, no matter what, even if they try to go up, they might try to fill all these levels before taking some major direction. Right? So it's always a risk of immediate downside. Once that levels got a clear, one can smoothly look for a long opportunity. Probably one can, once all these levels has been completely cleared off, one can think about whether initiating trades or some other patterns might show up. Maybe while coming down, it might create a lot of unfinished auction levels. There one can again, in fact, one can initiate a long setup over there. So,
Mr. Rajendran, what are those CR numbers over this candlestick on each above side red ones and below it is green one, CR something given there?
Come again, what is green and red?
On every candle, there's some number CR like.
Yeah, I'll talk about it. I'm just touching one by one, right? So we'll be Talking about each and every features.
Lot of things are there, like why these below candles are there, just simple candlesticks like there, and also what is on the extreme left of this chart, what are those numbers, what are those bars,
Everything I'll be talking about it. I'm just touching one by one. Right?
In 320 candle, you can see on both sides 36, 141, 177, 7. Is it not an unfinished auction?
You're talking about this one?
320 candle.
Yeah, it's an unfinished auction. Unfinished auction. You're talking about this one, right? These two candles.
Ah, yes.
Yeah, it's an unfinished candle. Probably I think the next bar opens, it will draw the lines. So since the market closed, it's not plotting any lines. Maybe if the next bar Monday opens, automatically you'll see 2 lines over here.
Rajendran sir?
Is it an example of unfinished auction?
No, come again?
Is it an example of unfinished auction? That's what I wanted to know.
It's an example of unfinished auction. So as simple as that. Somebody
36, 141, 177, 7.
Yeah, it is an unfinished auction, sir.
Rajendran sir?
Yeah.
Can I have one question?
Yes.
What I understand from unfinished auction is that on the seller side, top left, it should be 0. And on the buyer side, bottom right, it should be 0. Then it is a finished business.
Yeah, it's a
then
finished
it's a finished
yes,
business.
That is
Otherwise, if you have any numbers, it is an unfinished and chances of revisiting is there. Is that right?
Exactly.
Okay.
If
Thank you
you are
very
having
much.
0 on 0, that is a good auction.
That's a good option.
That is a good auction. Right.
Thank
So, but we are not concerned about good auction or not. But what we are concerned about is that if there are unfinished business levels are there. So just let me compress and I'll show you like the way it's clearing. I guess very rarely it skips the signals. Most of the levels it got clear, and most of the levels got clear, and most of the levels got clear over here. Only the 21st February is what it has a lot of reference level, which will be mostly continuing on 22nd. Also, it continued. Now, Monday, we'll be expecting these levels to get clear. It's very dangerous to remain long at this point of time. So, again, again, you see what are the levels are stretched up. It was stretching only for 2 days. 2 days of stretching. But you can extend this level by having a control over here. You can have a control to stretch as many days you want. So there is a level over here, unfinished level. So if you say that I want to extend this level for 3 days, it will extend for 3 days. Or let's say I want to extend only for 1 day, it will extend only for 1 day. Next day it will not at all continue there. So for a very, very short term trading, or especially for positional trading or intraday trading, where the unfinished levels are getting formed, and are there any exponential unfinished levels getting formed, that gives you a trading opportunity to think in what direction I should think. And that makes you to think in that particular direction in a very, very short term. And again, so these are the levels which got cleared in 2 days period. So all are exponential levels. Again, there are a lot of exponential levels on the side. The greens are the one which will look for an rally, and the orange color lines are the one which will look for an potential test towards on the downside. And yeah, so you can see almost it's beautifully shows most of the levels.
So this is the function of ultimate, right?
Yeah.
And which is not released yet, right?
Otherwise, one can do it manually.
Oh, okay.
Manually also one can do that, but you have to draw the reference lines manually, and that is a headache.
Okay.
Yeah, but yes.
Hello.
Yeah, come on.
Rajendran.
Yeah.
Your top one UAH is there here, the blue one.
Yes.
In that, can you open and see what is the position? What is the exactly unfinished one?
It came up with a momentum.
How many trades are not finished? Can you see?
It doesn't matter. Even one lot also it will show us an levels. 35 lots, 9 lots got traded over here.
9 lakhs or 35 is in 35. 9 is over.
No, 9 is the lots which is so it's supposed to be 0 here. Instead of 0, 9 was there.
Left should be 0.
Yeah, left should be 0. Instead of that, 9 is
Zero,
there.
instead of that, 9 is pending.
Yes, 9. That is why we.
And don't we say right side 35? It doesn't matter.
That is not. See, usually I'll tell you why we are looking into that top left and the bottom right. When I'm comparing diagonally, right? So actually, this is the level you'll be getting it. So usually when you compare diagonally, the top right and these are the leftovers where a trade should not supposed to happen. It could happen because of some sharp reversal market used to take, especially price goes to the candle high and all of a sudden it does a reversal, right? So only in those cases such kind of levels forms. Then that will be termed as an unfinished auction levels. Usually price have a tendency to revisit back.
Does more the lot size carry any significance?
More the lot size, I don't think so.
Okay.
Even if it is one lot also, it will be considered as an unfinished business. You can see a one lot level over here. That is considered as an unfinished business.
But success of the trade, does it increases with more the lot size?
We'll monitor live. That's what next 5 days of sessions, right? So I'm saying that I'm seeing this as a risky position to hold a shorts here. Let's see how the position goes away, right? So are they going to skip these levels or how? Let's just so far in my experience, very less amount of time they skipped out, more amount of time they cleared it. So still it is a risk to hold longs over here. One of the primary reason I just close my position. I don't want to take a risk when there are so many unfinished auction levels out there.
And this is a universal phenomenon. I mean, it's applicable even to commodities as well, right?
Any kind of trading instrument.
And second one is
one of the examples I shown in Dr. Reddy.
Mr. Rajendran.
Yes.
In whichever side UAL are more, towards that side price may move. Okay.
Yes, more the levels are, higher the odds that it.
Whichever side, yeah, either downside or upper side.
Very short term.
A short time only, two days, 1 day, 2 days time.
Yeah.
Towards that side, the price will move. Okay.
Yes.
Right.
Next week's sessions also will be recorded, right, Raj? Because I will not be able to join in the morning session.
I mean, you mean the live sessions?
Yeah, live sessions.
Everything will be recorded. Everything will be recorded and it will be posted on the same day.
Okay, sir. Perfect. Thank you.
Maybe today it might take some time because once the session is over by 5 o'clock, I'm just going and meeting one of my friends here.
No problem.
So maybe the recording will be available by 12 o'clock. Everyone will get a mail.
Okay.
Yeah, probably around 12 o'clock we can go and watch those recordings, and that recording access will be limited for 1 year. Along with that, we are getting access to all the market and order flow related webinars. So all those webinars access will be available for all the people who are attending the session. It will be available in 2 places. All the recorded session, which will be marked with the premium.
Okay.
So market profile and order flow. These are the 2 sections one can access. Under market profile, there are a lot of premium tutorials we write, not only video tutorials which we have done. Some of them are video tutorials, some of them are trend reversal signals, some of them are top pattern setups. So some of them, like market profile, we have a couple of top patterns we talked about. This is one of the top pattern we identified in S Bank. Similar top patterns we identified in Reliance.
Okay, so it is live data and idea sharing kind of thing, right?
Yes, exactly. And this access will be for you people for next 1 year, and where you have to key in your login credentials. You would have received in your mail, and you have to key in those things, and you'll be able to access those recorded videos, recorded levels. Even in future, we are doing many webinars, right? And it's not just limited to the current webinar which we are doing. In the future, we'll be doing more community webinar. All those community webinars will be posted in the announcement channel in our Slack. So you won't get the email invitation, but you will be mostly get announced in the announcement section, where you can go down there and then you can join yourself. Or most likely, if you are active in the market profile community and any webinars are there, we'll be posting in this community over here.
Okay, sir. Great. Thank you.
Mr. Rajendran, this password ID is being given to us, or we can create on our own?
It's already given to all the people. Probably by today, just check your mail. My team would have already sent to everyone.
I don't remember having received. That's why I'm asking.
If not, you just connect with my customer support team. If you haven't feel like you haven't received your credentials, right? So always you can connect with 95351334445 from 9 a.m. to 6 p.m. You can get those.
953513344.
Yeah, so they'll help you out and do the settings. If you haven't received the password, they might be resending you back to your registered email ID.
Okay. Sir, in unfinished auctions, can we change the numbers? If it is only one lot, it is showing out. We can change anything in the settings?
As of now, that customization is not provided. Maybe we need to think about it. But as of now, that customization is not possible at this point of time. Wherever such levels are matching, it automatically draws a level over there.
Okay,
More and more unfinished levels are getting formed. That is, I'm seeing that as a vulnerability. Positionally, it is a vulnerable to hold positions in their direction.
Okay, okay, sir.
So, did I went short? No, I haven't went short because I have a long bias, but I closed my position.
Okay, okay, sir.
I was holding from I taken at 10,650. I taken at 10,600. I right till 10,800 plus. But then after seeing this level, I thought like weekend it's good to go neutral.
Okay, sir. Thank you.
So again, all those market profile webinars, all the market profile tutorials, or order flow webinars, order flow tutorials, whatever is there, you'll be able to access from these two links. All our past webinars. Closely, you'll be getting some 100 plus hours of session of recorded webinar. So learn how to trade using order flow. Past session which we have done, and order flow tutorials. So some of them are tutorials, some of them are. So here is what the videos is supposed to be. I'm going to post the videos over here. And order flow features and order flow trading strategies. This is one of the community webinar which we done during the month of January. And one more webinar we are planning to do probably by this Wednesday evening around 8 to 10. We will be planning either Wednesday or Thursday is what I'm planning to do. One more session that will be mostly available in the announcement channel. So if you haven't subscribed to Slack, just go and subscribe. Already only the one who trained by me are available in this channel. Some of them are from the programming background, and some of them are from institutional background, and some of them are traders like you and me, right? So all class of traders are there, and it's a private trading community. People talk only sense over there. Everyone is a serious trader there, and nobody talk nonsense. No motivational speech. No posting screenshots of profit loss statements. No such nonsense is there. It's a pure educational environment where you can go and learn. You can ask your question, any number of questions you can ask over there. I'll be mostly active in market profile channel. In the market profile channel, we talk about market profile, order flow charts, any opportunity which is coming during live market. We'll be posting such kind of like the trap buyers or trap sellers, or any reference level to watch out from order flow or market profile. So here I'll just keep a reference saying that there's a trap buyer at order flow. So this is one of the market profile charts. I just mark every time we'll be having a couple of references. One of the reference level I'll be taking is the major reference level I'll be taking from the order flow. As a positional level is the trapped buyer at that day. On 21st, there is one trap buyer. And probably some 8 days back, there was one more trap buyer at 27,300 levels. So we used to keep a track of all those levels. So now I think Bank Nifty is looking good for longs, and immediately Nifty is looking better. So let's see how the thing goes on Monday. Okay.
Rajendran, one basic question: why the order flow and market profile charts are not available with AmiBroker?
Good question. One of the things is that AmiBroker supports something called low graphical segment, low GFX charts, right? So low graphical elements. It supports only 32 colors and mostly in pixels. All these are whatever in Ninja Trader. It's more of a C# environment. So it supports more than millions of colors. So the graphics, it can handle any kind of high-end graphics, right? So anything related to graphical stuff. So these kind of squeezy things I cannot squeeze in AmiBroker like this. I cannot squeeze it horizontally. I cannot squeeze it vertically. These kinds of compression is always not possible, right? In any broker, one can achieve it, but that requires a tremendous coding work, and which is not a user friendly. I would say that it is user friendly for building any kind of mathematical models in ME broker. Because I'm more of an ME broker fan than Ninja Trader. Now I'm using Ninja Trader for the last couple of years because Ninja Trader is where I'm getting low cost option. Otherwise, the other products like Market Delta or Investor RT, they charge closely some $250 per month or $200 per month for the order flow and market profile, and another $200 you have to pay for e-signal. So minimum your investment will be $450 per month, right? So with that kind of investments, initially I used to try Market Delta in 2013, right? So for almost six months you would have been spent close to 3 lakhs worth of only for learning market profile and order flow. Then I thought like it's quite costlier. Then we are looking into low cost option. Then finally we got settled down in Ninja Trader. Otherwise, most of the market profile and order flow tools comes at month-on-month cost.
Hello.
Yeah.
Rajendran, have you checked out the MSR pack, the order flow suite?
Which one?
One called MSR pack. I happen to see on internet it is an indicator for Ninja Trader.
No,
and I think it's
most of my automation these days. We try with other people. Other people are not ready to code our own requirements, so we are okay with the Indian vendors, and they are willing to help a lot. So the signals like MR shot. So I asked them, boss, can you do it for me? Then they are okay to work on my own requirements. And the other levels like UAL, UAH levels, and there are many levels which we are working with them closely. But I find that what are the requirements I am bringing it to the table. So if they find that it is effective, we are having a discussion, one-on-one discussion, and they are solving my requirement. So end of the day, order flow is order flow everywhere. And there are a couple of bugs which are associated with that. Sometime back, if I go to indicators and then change to the big size to 10 or something, automatically it will result in a different cumulative value. So those kinds of bugs has been, I reported that is a bug, and then they rectified those bugs. So there are many products which are still with bugs. There are many products in the internet, the order flow tools. You change something, everything got changed. So it will be quite unreliable. So here, if I find that if there is any bug there, those people are coming and taking it seriously, and they are pushing it, and then they're getting it done for me. So somehow, I'm just using Bell TPO since 2016 onwards. Prior to that, I used Market Delta, and then there are lot many tools there. You just go and search for order flow, you'll find tons and tons of tools. Right? Yeah.
So was there any difference between Market Delta and this thing, order flow, sir? Before you were using Market Delta?
No, I don't find any difference. It's the same thing. Everything is same. So order flow is like one form of candlestick, right? So that form of candlestick will be same everywhere.
Okay, sir.
On top of this, how you are applying those principles, that's what it matters. I think we haven't started with the principles. Tomorrow we'll be starting up with how to observe order flow charts. What are the things to observe from the order flow charts? We'll be talking in those front. So tomorrow we'll be talking about market profile setup, and so we almost covered some of the principles along with the strategies. But now tomorrow we'll be focusing only on the principles of order flow. That will give you more enhanced idea about how you can build strategies on top of order flow, right? So out of that, some of them has been automated, like R Delta or MR alerts, and there are things like what you should observe while you are watching order flow charts, right? How stronger the auction is, how weaker the auction is, or how volatile. From the volatility candle, what you can understand, what is an initiative or responsive price action, which we already talked about it. And tomorrow we'll be talking about delta unwinding and delta positioning. These are two different strategies again. And again, liquidity. We almost looked into liquidity, what liquidity is all about, how price travels in a low liquidity zones, how price travels in a high liquidity zones. and trap buyer and trap sellers, exhaustion high, exhaustion lows, high volume area, low volume area, what is its importance. So tomorrow we'll be talking in brief. Yeah.
You will be covering delta divergence as well tomorrow?
Yes, we'll be covering delta divergence also.
Sir, can you please teach couple of strategies for swing trade positional?
We'll tomorrow look into that. I'll be looking into 30 minutes.
In combination with the market profile and order flow.
Yeah, that has to be mostly combined with the market profile and order flow. We'll look into that tomorrow.
Thank you, sir.
Yeah, and so coming back, let's close with one more strategy. So there's only one thing pending over here. This is RBI policy announcement. Like on RBI policy announcement, how the price made a top and what kind of opportunity persists over there. How the volatility was there. That's what we want to look into in this example. So usually event trading involves a lot of risk, and RBI is supposed to announce RBI event by 11:45 a.m. And when the RBI announcement is supposed to happen, right? So 11:45 a.m. is where the RBI event happens. What happens prior to that is that most of the short-term players or most of the intraday traders, they will tend to bet before RBI announcement, which is a bad idea. I would say that. Because most of the time your best opportunity comes only after the event announcement, and most of the time the speculators will be having a very tight stop losses. So what you can see here is that you can see the 10,000 11,100 levels, multiple bottoms are getting formed over here. So you see that 7, 52, 31, 89, 9, a lot of longs are getting initiated at 11,000 levels, kind of a psychological reference. Look into the volume. Volume is 995 quantity, 737 quantity, 751 quantity, 807 quantity, 640 quantity, 630 quantity. Volumes are ultra low. Every bottom was happened. People are coming and buying again and again at 11,000 levels, right? So you know that it's tough to remain long in the direction, right? So hardly very few. The opportunity is not on the long side. Probably kind of an short on the rise. It's there because most of the players are having stops at 11,000 levels. So just have a check how these players are being initiated trades around this level. There are many understanding you'll be able to get once you started looking into order flow. Your idea about the markets improves a lot rather than blindly trading the buy and sell signals or blindly going up with the indicators. With order flow, you'll be able to get the context right, and you know why to stay away from these kind of positions. You know that holding shorts are very risky because many people are coming and accumulating at 11,000 levels. 11,000, 11,000. It's supposed to be 11,100 levels. It's typically a round number. Many people have a stop loss below 11,000 levels. You can see repeatedly volume is relatively low. And again, one more responsive activity happens over here. Kind of a responsive buying. Again, price went. Again, price comes to 11,000, comes up. 11,000 again comes up. They're doing it for quite some time now, and almost another half an hour. RBI announcement is supposed to happen. So these kinds of the things, if you're seeing this, one of the things you should stay away is that more and more stop loss is getting built around 11,000 levels. We know that it's going to break, but still you should stay away from trading towards this these kinds of zones. One should, as a trader, one should clearly avoid those levels. When it's coming and breaking, you know that most of the stop loss will be converted into volumes. You can easily see from the order flow. And you can see the break, which is coming in the form of an exhaustive low also. It's an exhaustive high or exhaustive low with a lot of zeros in between. So I think the time is 11 o'clock now. 11:15 is where the RBI announcement is supposed to happen. And another 10 minutes from here, we are running at a 15x speed. You can see how many times the price jumped from 11,000 levels. Even time is 11:45. Okay, another 30 minutes is there almost. I'm sorry. It's not 11:15, but 11:45. Almost pretty close to the stop. There is no absorption here. See that there is no absorption, so you have to be really careful. Until then, there are a lot of absorption happened sometime back. Price is going up with no absorption. Time is 11:18. You can see that there are no absorption, there is no momentum inside those candles. Low volumes, only traders are struggling there, and most of them are having stops on the downside. And 11:25, another 20 minutes or so. Now almost 15 minutes from there. See, high volume was happening there, 790. 790 is kind of a trapped buyer. At 11:35 almost. I just marked a line at 11,100 levels. Again, this is where the announcement came, 11:45. And, one big volume happened over here, 11:1166. It was high volatile candle, very high volatile candle, and price is back. You see that volumes are relatively big, and so temporarily they could touch VWAP levels. Okay, see the volatility. See the zeros which are coming in. All the zeros are a sign that it's breaking the stops. So a lot of stops would have been hunted over here. 520. So a lot of stops at the day low. Who were taken the filters, right? So 11,000. So they would have been placed at some stop loss would have been placed at 10,095, 5 points below that, 2 points below that. Every time the price is touching a certain level again and again and again, it gets more and more weaker. So that is why price have a tendency to break. But still, even more, some stops would have been kept down there. Right? So again now. Again, price is coming. Now you can see a lot of selling coming over here, momentum selling. Again, a lot of momentum selling here. Now again, some more stops would have been hunted. Wherever you keep a stops on an RBI announcement day, whether on the downside or on the upper side, it gets hunted most of the times. So it's kind of a stop trigger. Most of the players who would have been kept a stop loss of 10 points, 20 points, they are mostly day time frame traders because they are coming and accumulating exactly at 11,100 levels. They are mostly intraday traders. Intraday players trade like that. They come and accumulating. They're not just doing one time. They're just repeatedly doing the same thing again and again and again. These kinds of setup will not happen every time. But whenever the price is reaching some psychological reference number, something like 10,000 levels or 11,000 levels or 10,500 levels, or something, let's say Reliance is reaching 1,000 levels, right? So our 500 level, stock is reaching 500 levels or 100 levels. So those kinds of places where players, trading money will come for the play, especially small traders will come to play at that levels, and they want to keep a tight stop loss below 100. Mostly the stop loss will be at 99 or 88 if it is at 100. If it is something like a 10,000 levels, then probably some 20 points here and there, the supports will be there. So most likely small traders will like to come and play over there. So once you know what kind of players we are dealing with, at least you know that these are the zones you should be staying away from taking longs here. Even though if you have if you know that all your indicators are positive, even though all your Bollinger Bands are showing buy, or there is a trend line breakout, markets at all-time high, right? So our markets are at new swing high. By knowing what kind of people we are competing, one can easily stay away from those kinds of dumb players. Right? Dumb players come and play at around reference levels. And then end of the day, it just whipsawed every day. I mean, whipsawed, just completely whipsawed, and then closed marginally lower for the day. Again, price went back around 11,000 plus levels. That's where they closed. But till today, that's the high in Nifty so far. Right, so what we can do here is that we can stop the session here, and we'll discuss more interesting strategies tomorrow. I'll be taking more videos, screenshots for tomorrow's session, and we'll be discussing some of the principles of order flow. Yeah, that will give you a foundation for monitoring any kind of trading days, right? Yeah. So if you have any questions, you can ask me. Otherwise, we are done for the day.
Rajendra sir, one more question. Will you be telling us the settings for individual stocks, like range bar, and how do we set for the stocks?
Yes,
Is there any guideline?
I'll be guiding. We haven't touched base at all.
But no.
I'll be touching each and every points. Without that, I'm not going to leave you, right? Even if tomorrow class extends till 7 o'clock or 8 o'clock, we'll be closing all the concepts, and then we'll not extend the class this time. Usually my class gets extended, but I ensure that this time our class will not get extended.
Thanks a lot, sir. Thank you.
Yeah, thank
you. Whether this Ninja auto flow is different from other one, Bell?
No, auto flow is same everywhere. Maybe, as I said, here and there you might be seeing some difference. Maybe if you are seeing in some other auto flow, the way they calculate, right? So the 371 will be 371, or sometimes it will be shown as 360, and probably the 7 will be showing like something like a 10 or 12. But if you sum up, no matter what, if you sum up this block, the total volume will be same at each and every price level.
Now, which you are suggesting, which software now, ultimately?
I'm using Bell TPO, so I naturally.
Bell TPO or Ninja TPO order flow?
Ninja Trader order flow, they don't have unfinished business levels, I believe.
Okay, okay.
They don't have MR levels.
So Bell TPO is better altogether, no?
Bell TPO is where most of my inputs are coded into automated versions.
Okay. And you are using Ninja also now? Is it for a broker only for you? Or
no, the Ninja is basically a trading vendor, like trading software vendor like Ami Broker.
Yeah, yeah.
They are also a broker. They transformed themselves into a broker. Right? Previously, during the 2008, 2009 kind of period, they are only software vendor like Ami Broker.
Okay.
And, now they are brokers only for US markets.
Okay.
Yeah, and
another charting, what do you call program? This one, Ninja, again charting only, no?
Yeah, they do have an. You need to have a license, I believe, to take this. Right click an indicator that they started recently. They started supplying auto flow charts because their requirements. Probably they might also feel that more crazy people are going crazy behind auto flow tools. So it might be somewhere over here under auto flow. Yeah. So these requires. So there is something called cumulative delta. Market depth map, trade detector, volume profile, VWAP. So they also provide everything, but this requires a license. I think their license cost comes around $1,000.
Okay.
And
for Monday practicals, I am asking. I got Zerodha or ICICI Direct, and if I download this Bell TPO is enough, no?
See, Bell TPO. First of all, Ninja Trader is a platform which is free. You can go and download from ninjatrader.com.
Okay.
It comes with a free license. On top of the Ninja Trader platform, there are many third-party vendors are there for Ninja Trader. It's under Ninja Trader ecosystem platform.
Okay.
So one of the vendor is Bell TPO, and they supply market profile and order flow tools for Ninja Trader users. Right. So you can download Bell TPO. You can go to belltpo.com and you can activate your trial.
Okay.
And on top of that, you need to have data. It can be from global data feeds or true data e-signal, which is a month-on-month subscription.
Now, these two are necessary for Monday's practicals, or you are only
Yeah, Monday's practical. Anyways, you'll be seeing my screen. I'll be running my screen
yes,
throughout
yes.
the day.
Yes, yes. You'll
But
be
still,
doing the
if you want to
trading.
practice on your machine, always you can anytime you can go and download the trial and you can try it out.
ME Broker is there with me.
ME Broker is not one cannot build order flow and market profile tools on ME Broker.
Okay. Yeah. So I need to go for the Bell TPO and Ninja Trader, no? Ultimately.
Yes, exactly. Yeah.
Ultimately. Okay.
Yes.
Then after learning this, to implement these two are necessary with whatever.
Yeah, definitely. Definitely, it is necessary.
Okay. But
so another one thing, sir. So
yes.
when I'm telling these strategies, can you tell us where to enter and where to exit? I'm not told anything about the exit strategy, so when to get out.
So most of the strategies, like the absorption strategies, are like once where the absorption converts into initiative directions, right? Especially when you're talking about exit. Let's say, let me pull up the whiteboard. So there are many strategies we talked in today's session, right?
Yes,
so one of the strategies we talked about is the absorption breakout strategy. So in this strategy, what you have is like we'll be looking for responsive auction to get it convert into what you're looking for, responsive to
initiative, sir.
Initiative action. So once there is a subtle change, once you got that the direction is getting into an initiative auction, then what you should do is that you should trail your position as long as that initiative auction is continuing. The moment it finds again, the initiative auction is converting into responsive. Probably that is where one can think of booking their profits over there. Until then, I guess one should go and chase the trend as long as it goes.
Okay.
Right. So I think there one should not limit their profits to VWAP. Whereas, so one should trail. So my comment is that one should trail as long as the initiative auction behavior is there. Initiative auction behavior holds. Right. The second setup is like momentum auction reversal. Momentum auction reversal. When it comes to momentum auction reversal, typically it is VWAP most of the time, but it depends upon at what location it is coming. Like let's say if it's coming at 200 MA, the momentum auction reversal is coming in, or some market profile pattern. Tomorrow I'll explain what some of the market profile pattern, especially at C period. If it is coming at a C period from market profile pattern with a momentum auction reversal, which has higher odds of revisiting even to the other side of the day. Like so, you can expect a total complete reversal. And there are other patterns like which is coming at a day high or a day low, day high or a day low, a day low. These are the places if you are seeing a multi-day high, multi-day high or a low, where one can trail for bigger profits. Otherwise, most of the setups ends at VWAP. And most of the setups ends at VWAP. The remainder of these cases, one can look for a bigger targets. That mostly depends upon the market profile reference levels. So that we'll be talking about in tomorrow's session. And what we talked about it, unfinished business. Unfinished business is not a strategy, but it is one way where you can position yourself, right? So most of the intraday levels got cleared on the same day itself. But there are times multiple levels would have been carried forward for 1 or 2 days. That is where you can understand that as a positional risk, positional carry forward risk in the direction of multiple unfinished business levels. Let it be UAL or UAH, whatever side is there. Such can some, let's say, when I say multiple levels, more than 4 levels or 5 levels in a row, I'll consider that as multiple reference levels. So in that case, carry forwarding against the direction of such unfinished reference level are always risky. Or in a worst case, like Bank Nifty, it also gives you an opportunity to fade towards all those reference levels. Right. So usually that's an positional trade. Hardly that trades will last long for 1 or 2 days towards the clearance of all those reference levels. So, and very rarely an unfinished business which is happening after 2:30, it may not get cleared. So in that case, next day you won't have to carry forward those information.
Okay, sir.
And the other strategy we talked about is momentum reversal strategy. Momentum reversal strategy. So here also, it is nothing but an initiative to initiative. It's kind of a V-shaped reversal, which we talked about it, right?
Okay.
In this case also, we'll be using VWAP as an exit point. And what else we looked into it? We looked into...
Yes.
What is that?
Only this one only, sir. Any other thing?
Trapped seller strategy. Trapped seller. Trapped seller strategy.
Okay.
Again, so trap seller strategy also we usually move towards VWAP most of the times, and very rarely, probably out of on a scale of 10, right? So 5 out of or 4 times, 4 out of 10 times that day could be the day's low, right? If in that case we'll be considering in that case will be tracked positionally. Positionally, that trapped buyer or trap seller strategy. So trapped buyer. So that day could be day's low, and so usually one can expect, but such levels are called as unsecured levels. Secured levels. Let it be trapped buyer or a trap seller. No matter what, such levels are always positionally meant to be revisited back. Right. And what are the things we still left? I think that's the thing we talked about it. Tomorrow we'll be talking about delta positioning, delta unwinding, cumulative delta strategies, and failed breakout strategy. Only one failed breakout strategy we've seen that, which is also combined with momentum auction reversal, which is a breakout of previous day low. Right, so we looked into one of the example in the morning, but tomorrow we'll be looking into failed breakout and momentum breakout strategies. So there are total 4 more strategies are still left in the and one more strategy is event trading. Event trading we already looked into RBI announcement, and probably tomorrow we look into budget. So last budget, how the order flow was there and how was the reaction. So tomorrow we look into how to trade event trades, how one can understand where we will be mostly using delta packet positioning, where most of the players are positioned. Are they smart money or dumb money? If it's dumb money, what is the behavior? We'll be mostly looking from the delta packet positioning angle. Yeah.
Mr. Rajendra, I hope tomorrow this audio problem will not be there.
It will not be there because I'll be doing it from my home.
Very disappointing, actually.
Yeah, I know that. Tomorrow it won't be there.
Okay.
Right? So yeah, I think so, because today I just came to my office, and otherwise I would have been at home. Today I have to go and visit one of my friends. So I have to be in the office.
Okay, then thank you.
Sir, you have order flow market depth map with you, sir. Can you show us how that works, sir?
No, I don't use it because none of the data vendors supports or market depth. For market depth, we need at least level 3 data, or you need a minimum of tick by tick data and a level 3 data. Without that, you cannot plot market depth or a book map. If you want to experiment, you can go and download bookmap.com.
Okay, okay, sir.
You can go there. You will be getting an market depth for bitcoins.
Okay, okay, sir.
So they are providing for free of cost. Or if you want for US markets to try out, you can try bookmap.com, and that is also available in Ninja Trader now. But for Indian markets, as per my knowledge, none of the data vendors are providing level 3 data or tick by tick data because it's very, very costlier. And moreover, the data transmission is very huge. Probably in a trade, in a trade, in a second, hardly maybe 4 to 10 trades would have been happened. I was using once with US markets. So in a second, there are 16 to 20 orders were coming each and every second.
Okay.
So that kind of volume our internet bandwidth cannot manage, and always our internet bandwidth always misses such kind of data points.
Okay.
I believe a long way to go. We are very new to order flow kind of concepts. So we are pioneer to who are using order flow right now are pioneer to kind of an early adopters. That's what I can say. That hardly very few people knows about what is order flow and what is market profile.
That is true, sir.
Yeah. But I would say that it is the real way of understanding what is truly happening inside the markets by studying those buyers and sellers' behavior in real time.
Yes.
Yeah.
Yes,
So we'll stop the session here and we'll continue back again in tomorrow's session. Until then, the session tomorrow starts exactly at 10 o'clock, right? So kindly be there on time. And I hope tomorrow there won't be any audio issues. Okay, there is a question from Pradeep Shankar. He said, like, I don't have a mic. I'm sorry, I missed many questions posted in the group chat. Okay, Pradeep says he has 4 questions. Okay, so what is the difference between iceberg and MR strategy? Both seem same. No, both are not same. Iceberg, you are talking about the trap buyers and the trap sellers. At times, the trap buyer and trap seller combines with MR, right? So, but not every time. There are many times MR signals will come, but it will not be iceberg order. It will not be a big trap buyer or a trap seller. But yes, sometimes it could be. Right? It's not every time. So there are times it could be a failed breakout strategy combined with MR. There are times a failed breakout strategy combined with trapped buyers or trap sellers at the day low. At times it could be combinations of trap seller, momentum auction reversal, and failed breakout. So at times it could be a combination of 3 also. So it doesn't matter. Ideally, whether it is same or not, none of them are same. It can be applied individually. And the second question is, when we have taken the trade towards VWAP, if not met by responsive buying in between, how can we continue to be in trade and initiative selling will continue? Other cases where we need to exit in between when responsive buying comes, what quality of responsive buying will cause the reversal? Okay, interesting question. So I would say that if you're finding that instead of, if you are anticipating an initiative drive and then more time started spending in sending in the consolidation, right? So maybe you should think about exiting the trade there rather than waiting for that, or try to book some partial profits and leave it rest to the stops, right? So taking a trailing stop loss, it doesn't matter because always we are running in a tighter mode, so there's no point of taking a trailing stop there. So instead, one can, if you are in a profit or loss, always consider booking half if more and more time is spending in sideways, because those are the zones where could be in failure zones. Third question is, when you have opposite references in the 2 indices, UAL in NF and UH in BNF, how do you position yourself in trade? So, I mean, I'll go with my current market profile bias. My current market profile way, I'm just thinking of longs in both NF and BNF, but immediately not in NF because of the risk. But still, I'll tend to go long in BNF, right? So, if there is suitable opportunity coming in BNF, I will first go long in BNF rather than in NF. at this point of time. But let's say Bank Nifty opening some 20-40 points gap down and it's clearing all those reference level and it's coming back again. Yeah, then in that case, it doesn't matter whether Nifty or Bank Nifty. I will think about going longs in both the cases. But enough, I'm not comfortable in holding my longs as of now because I cannot handle and I cannot afford to handle in my option position. Another 40-50 points gap down, my other money might go for an my other money premium erosion might be quite high because expiry is nearing. I'm more of a directional trader, by the way, and I don't. I go for a hedge, but this time I was playing naked games. I'm not comfortable with my time-based erosions. I'm okay to wait. If Nifty comes down, definitely I'll think about long. And I'm expecting 10,900 to be done most probably by next week. Tomorrow I'll explain why 10,900, right? Why one should be. We've been talking for quite some time, and it's not an easy game to trade. But so far, still there is an immediate threat. But once the threat is cleared, again we'll re-enter long there. Right? So that UAL is what I'm considering as a threat in considered as a threat. Whereas UAH in BNF, I'm seeing it as an opportunity for my longs. So the natural way is not to fight. So let's go neutral. Let somewhere either in Nifty or Bank Nifty, there will be some opportunity. It's okay to miss opportunity. If I'm missing an opportunity, it's okay. Let me go and get the next best available opportunity there. How many times we missed best opportunities in the markets, right? Many times. This is one such opportunity. Not necessarily you have to be part of every best opportunity in the world. Right? So it's okay to miss some of the good opportunities. That you would have been mostly learned in a hard way that it's okay to miss some of the juicier opportunity in the world. Like yes, Nifty was long, all the global markets are positive, but still it's okay to miss the opportunity. That is where you should be able to get more and more better opportunities. That's what I've seen. Like many times you find that it's one of the finest opportunity and you go and do some circus in front of that. You'll know that markets are not that easy to give easy money there. Market never gives easy money all the time, at least. Yeah, very rarely, one or a few times here and there, you go and take the position and market moves in your favor. But not every time. So that is one of the reasons where you have to learn to identify which is a threat, which is not a threat to your position. Or which is the one, no matter whatever the scenarios are, market could come to a certain price level. What are those reference levels? We'll be talking some of those reference levels tomorrow. Okay, so the fourth question is there any book can you suggest for auto flow trade strategies? As I said, for auto flow trading strategies, if you want to know better about auto flow, there are no real learnings there. It's mostly self-driven practice where you have to practice day in, day out. Open your charts, take the reading every now and then, learn mostly live. So, and most of your experience comes by running the playback connections day in, day out, and trying to observe the markets, Nifty, what happened today, why after the low volume, how the day low taken out. When the day low is taken out, what was your understanding about the markets? And are there any key reversal pattern comes? Go and check each and every reversal patterns. Over a period of time, you'll be start seeing many patterns at the day high or day low. Every time you record something, how the day high has been made, how the day low has been made. Is there a possibility where I can be able to guess that this could be a day high? This has to be a continuous practice. One has to do no matter what kind of trading day it is. One have to start looking into these kinds of information. For a period of time, you'll be start seeing patterns like MR, or the patterns like trap buyers, trap sellers. Almost every order flow traders who are seeing day in, day out, they know what is going on over there. Right? And the most key thing is that try to learn the basic principles of order flow. Yeah, tomorrow we'll be covering, in one shot we'll be covering everything, which helps you to learn to understand any kind of order flow chart. What exactly to look into the order flow charts. Or there are many times you will be seeing big buyer all of a sudden, big seller in a sudden. You should not panic, and then you should not square off your position all of a sudden because you are seeing a big buyer or a big seller. You should not enter because of there is a big buyer or a big seller. Try to understand what kind of activity it is, whether it's an initiative activity, whether it is a responsive activity. Should I have to stay in the trade, or is a day low and then it's a trading opportunity to go against those big buyer or a big seller? So that is the kind of confidence one have to develop, and it is as good as learning a new language, or it is as good as learning a new profession like an engineering profession or a doctor profession or a CA profession, or it is like learning to do how to do the business, something like that. So learning order flow is also one form of market understanding. One have to commit serious time if you want to be a serious trader. Right?
What is contract reversal, CR?
We'll talk about it tomorrow.
Okay.
Yeah, so it's one form of market pressure indicator. Yeah, so thank you everyone. Thanks for your time, and tomorrow we'll catch up again by 10 o'clock in the morning. Thank you.